was that a number of confidential sources for U.S. diplomats who faced real danger when their names were exposed.
Then Secretary of State Hillary Clinton drove the point home that
every country, including the United States, must be able to have candid conversations about the people and nations with whom they deal.
Shortly after Cablegate, the Swedish government issued an arrest warrant for Assange on allegations of rape and molestation. He claimed the allegations were fabricated to get him extradited to the United States, a claim the U.S. government denied. Either way, Assange's next move was
to seek refuge in the Ecuadorian embassy, which really was the beginning of the new chapter in his life and what we're dealing with now, which is him being stuck in London.
What was supposed to be an office in an embassy is now Assange's self-imposed prison to this very day. But that doesn't mean he's slowed down. Since being trapped in the embassy, WikiLeaks has released files about Guantanamo Bay prisoners, Syrian political figures, and the draft to the Trans-Pacific Partnership. And then came the 2016 U.S. election.
Thousands of leaked emails showed Democratic Party officials possibly plotting against Bernie Sanders in his race against Hillary Clinton.
Over the course of 68 days, WikiLeaks released 20,000 confidential Democratic National Committee emails. In terms of the presidential race, if you look right here, when Assange released the first batch of emails, Trump actually takes his first lead against Clinton.
I think we've had enough of the Clintons, in all fairness.
Once WikiLeaks started exposing secrets of the Democratic Party, Julian Assange became a hero to many on the right. Public opinion kind of flip-flopped.
WikiLeaks.
From the emails, we now know Hillary Clinton's campaign manager makes risotto, and also how the DNC squashed Bernie Sanders' campaign. One thing we don't know is who gave Assange the stolen emails in the first place.
Many leading Democrats say they suspect it was the Russians. They released an analysis from a private cybersecurity firm that had said it was the Russians.
But Assange claims
our source is not the Russian government, and it is not a state party.
So this is where we stand today. The public still doesn't know who provided the emails to WikiLeaks. Meanwhile, Assange is still running WikiLeaks and still releasing documents. In March 2017, he started publishing documents from the CIA's Center for Cyber Intelligence called Vault 7.
The CIA, the agency charged with finding and keeping our top secrets, can't keep its own secrets.
As long as Assange has a connection to the world, no government secret will be too far from exposure.
Julian Assange is still in the embassy. Maybe he'll leave, maybe he won't. Kind of regardless, his work has been done. He's changed the way people think about their governments, about their own secrets, about their own hackability, and really the world has changed because of him.
disclose everything you won't admit.
And action.
This entire video is based on a true story. When I do like motivational speeches or even tell myself like, love yourself and you should love yourself.
This is Lily Singh, but to fans all over the world, she's the YouTube star Superwoman.
What if everyone it's a girl?
Superwoman. I know we can change the world for the better, one positive day at a time.
My parents now know what I do. They didn't know what I did for a long time in the beginning of my career. I was just making videos in my room. They had no idea.
Mom, Dad, have you seen my keys? I can't find them anywhere. Because you're always on phone.
Until someone called them, like a family member from another part of Canada, was like, Canada, is your daughter making videos? And I think my mom was like, I don't know, Lily, are you making videos?
Just making videos grew into an entire career. Today, Lily's YouTube channel has some 12 million subscribers, over 2 billion views, and guest stars like Michelle Obama, Dwayne "The Rock" Johnson, and Seth Rogen.
I think a lot of young girls are raised to believe that you're going to go to school and then graduate and then get married and then get a job and then have kids.
And Lily was on that path, all the way through a psychology degree at York University in Toronto. But when she started thinking about a career,
I started to immensely panic and think something was wrong with me because I tried to figure out my life and it wasn't working in that straight line.
It was 2010, and YouTube was only 5 years old.
I thought nothing of YouTube. I was probably the last person in my friends to discover YouTube. And I remember when I did, I thought, this is so strange. There's people making videos in their rooms and other people are watching them.
So she figured, why not give it a shot?
I one day posted a video because I was sad and I wanted to be creative and happy.
She didn't know how to edit video or write scripts, so she winged it.
It was so bad and so cringe, and my expectation was literally nothing. I was like, I'm gonna put this video up, a couple of my friends are gonna watch it, probably make fun of me, and that's gonna be the end of this. The second and third video came from, wait, 70 people watched my first one, can I get 80 to watch the next one?
She kept creating, she kept posting, and the viewers kept coming. Lily had found an audience.
A lot of the comments were, oh my God, there's a brown girl on YouTube.
More specifically, Indian. Lily's parents immigrated to Canada from India, and Lily was born and raised in Scarborough, near Toronto.
My home life was awesome. My parents, even though I portrayed them to be quite strict in my videos.
Oi, Lily, where the rest of your skirt, huh? I teach you like this, to walk around like this, showing everything to everyone?
They actually aren't like that at all. They're pretty modern and pretty cool.
Your dress is short. Don't know what for.
And were pretty lenient with me. I mean, I got away with a lot of things. I was a brat. I was a brat.
She had a different idea of what she wanted out of life than other kids. In a grade school graduation slideshow, her classmates said they wanted to be lawyers and doctors.
And then I came up and I was like, rapper.
Making out with your friends, man. But then you say that you hate hoes.
I could just feel my parents being like, why?
Because that's just not something women really did in the Singh family.
I know there was a ton of people that weren't happy about my birth being a female, so I think, and that's some real-ish, but it's a real thing. The best thing I could have done to prove to so many people that didn't want my mom to have a daughter was to become Superwoman.
What up, everyone? It's your girl, Superwoman.
It was the name of Lily's favorite hip-hop song by Lil Mo featuring Fabulous.
I love the song so much because it was one of the only songs at the time that was an empowering female song, where Lil Mo's going on about, like, I will save guys with my superpowers, and I will save girls with my superpowers, and I am the Superwoman. I thought, this name that I've had for so long that empowered me when I was younger, I'm gonna make this my screen name.
Maybe there should be a new series.
Superwoman didn't just burst onto the scene overnight with a viral video. It was a steady climb fueled by hard work.
The moment that I thought this is going somewhere and this could be a career was the first time I performed internationally. It was in India. And it was the first time where I was truly across the world and people knew my videos.
Singh has transformed herself from a bratty kid to an internet personality to a media mogul. She starred in a feature film, A Trip to Unicorn Island, in 2016. And her book, How to Be a Boss, hit the New York Times bestseller list in 2017 while she was on a 30-city international tour. Lily started out with the goal of getting millions of subscribers and financial security.
Hurry the hell up!
But after surpassing those goals, success has new meaning.
I've really come to terms with the fact that my definition of success is what's the best legacy I can leave behind. And it's not the number of views and the number of subscribers. It is the number of people that can say, this girl changed my life or changed something in my life positively.
McKee is often found in the brains of deceased athletes, military veterans, and others with a history of repetitive brain trauma. Hundreds have donated their brains to the VA Boston University Concussion Legacy Foundation Brain Bank.
This is a former NFL player who died in his early 70s, and this is a veteran who also died in his early 70s.
Dr. Ann McKee dissects these brains.
The hippocampus and the mammillary bodies are very important for memory. I can see that they're slightly affected.
McKee recently dissected the brain of former New England Patriots player Aaron Hernandez, who was convicted of murder and later committed suicide.
You'll see right away that the brain is showing signs of shrinkage. You can see the crevices in the brain that you can't see in the normal.
McKee says Hernandez's severe case of CTE impacted his decision-making, depression, and ability to control rage and aggression. Right now, she thinks we're underestimating how many people have CTE.
We were able to distinguish between CTE and controls and CTE and Alzheimer's disease. The next question is, can we do this in the blood, and can we do this in living people? And we aren't there yet with those answers.
But the need for a diagnosis in the living is motivating companies such as Quanterix in Lexington, Massachusetts, to work faster on technology that could diagnose concussions and CTE in as few as 30 minutes. Kevin Rosovsky is the CEO.
It's like a high-powered microscope. And so by doing that, we can see little biomarkers that you couldn't see before in the blood.
Quanterix received a grant from the NFL and just went public. Since then, its stock is up more than 40%. The company sells a machine called Simoa for $175,000 to other biotechs, hospitals, and researchers.
And for the first time in history, we're able to see brain health in blood, and that's a major breakthrough, and that's leading to less invasive testing, and we've already been able to see evidence of concussions, and there's the beginning evidence of being able to see the accumulated effect of concussions.
Quanterix is also trying to detect Alzheimer's disease, multiple sclerosis, and ALS. Rosovsky says he thinks diagnosing concussions will be easier than diagnosing CTE.
Diagnosing CT in the living probably is a couple years away. We're real excited to see the progress, but reducing some of that work into actual tests in a laboratory takes time. There's regulatory approvals. There's a lot of red tape that you have to go through.
Also in this race to diagnose CTE in the blood are Athlon Medical and Exosome Sciences. And New York's Mount Sinai Hospital is scanning for the disease in the living. But it's just one step in a series of questions for those with serious head trauma. There's still no cure for CTE.
Even if we had a great idea for a treatment, there's no way to test whether it's effective or not. So that's the enormous advance that we'll get if we can develop a biomarker for this disease.
In Boston, Ann Mostu, Bloomberg News.
Wine is a $300 billion global industry where one person's opinion can make fortunes or break them. That's because of this man, Robert Parker, and his newsletter, The Wine Advocate. For 3 decades, he dominated as the world's most influential wine critic. Now Parker's protege is building an empire of his own. Antonio Galloni runs Venice.
Antonio, tell me, what are you trying to build at Venice?
Well, at Venice, we started with the idea in 2013 of building a world-class platform. We have a database of about 250,000 professionally written reviews. On Delectable, we have 7 million user reviews. Through Delectable, we also have a partnership with Whole Foods and several other partnerships that we can't announce just yet. And when you put that all together, what we have is something that no other company in our space can even come close to.
Do you think of yourself as the next Parker?
Not at all.
Why?
Because Steve Jobs said you can't live your life trying to be somebody else. So he's one of my biggest influences, and I've never wanted to be a replica of somebody else because a replica is never as good as the original. Bob is a genius, fantastic, one of a kind. We're going to be something completely different, and I have no desire to be some version of somebody else.
Different in what way?
Every decision that I've made at this company is completely anathemic to what Bob did with his company. I want our writers to be partners. All of my senior people are locked into the company. They all have equity or they have a path to equity based on business results. That's something that we never had at Parker. Our benefits are world-class, and everything that we've done at Venice is completely different from that model. When Steve Tanzer, who is the most experienced active wine critic in America, wants to work with us, that says something. When Alessandro Masnaghetti, who's the best cartographer of vineyards, wants to work with us, that says something. When Neil Martin, who's a superstar wine critic with enormous experience in Bordeaux and Burgundy and the former lead critic at The Advocate, wants to come and be part of our team, that says something.
You make it sound like The Wine Advocate was a disaster as a company and a miserable experience as an employee.
No, it was great because I got to work with Bob Parker when he was at his prime, you know, and Bob was like a second father to me, and we talked on the phone all the time, and he gave me great advice.
Can anyone's palate dominate the wine criticism business the way Parker's did? And should anyone's palate dominate it the way his did?
I just think the world is very different today. You know, it's just a totally different world. It's probably not healthy to have a single person dominating the world.
It's not even wine criticism, it's the wine industry.
Yeah, that's probably not the healthiest thing in the world. But I think that there's just such an opportunity right now with social media and technology to reach such a massive number of people that I think it's possible that 1 or 2 people will actually have more influence than Bob Parker did, because they will, again, this goes back to your first question, not trying to be a version of somebody else. You see this in sports all the time. It's like, oh, well, nobody will ever beat this record. And then somebody comes along, you know, it's like tennis, Pete Sampras. Nobody's ever going to win as many Grand Slams. Now you have 2 guys who are ahead of that and 1 knocking on the door. And so I think a lot like that.
You're a former investment banker. How does that inform and influence what you're doing and what you've done?
My generation has had to deal with a lot more challenges. That's why I think we're actually much better poised for the future. My first job in finance, the first thing that happened was long-term capital, 1998. Then the tech bubble melted down. Then there was a mutual fund trading scandal. You know, that was all like within about 5 or 6 years. And these are the things that I had to deal with as a young executive. My peers who were 20 years older didn't know how to manage in crisis. They'd only seen Black Monday. They'd just been in a big bull market. It's very different. So I'm very lucky. People of my generation or a little bit younger have actually had to deal with a lot more crises. I think that's actually good for learning how to cope with challenges in business.
From the outside, it kind of looks like you're trying to demolish the house that Parker built, right? You left The Wine Advocate.
Yeah.
You merged with one of his chief rivals.
Yeah.
And you just hired his successor, Neil Martin.
Mm-hmm.
So are you?
I think what that says is that all the best people want to work at our company. And that's really what we strive to create starting in 2013. We wanted to create a world-class company that would attract the best-in-class talent, and not just on the content side, on the technology side, on the digital side, our office, and at every level, what we're trying to, we only hire superstars, and we're looking for those superstars.
In the world of professional wrestling, there's something called a swerve.
Hulk Hogan has betrayed WCW.
Some examples. These tag team partners are called baby faces, or the good guys. Then one of them swerves when he super kicks his tag team partner in the head, quickly assuming the role of the bad guy, or what the wrestling world calls the heel.
Are you kidding? What a despicable act that was!
Or a match is almost lost when, what's that? The superstar wrestler appears out of nowhere sprinting down the aisle to save the match.
That's the Warriors music! That's the Ultimate Warrior!
That's a swerve. So it should go as no surprise that World Wrestling Entertainment, known as the WWE, the most popular brand of sports entertainment in the world, is prepared for any swerves that come their way. So here's the story of how the WWE learned to see the swerve coming. So I spoke to Bloomberg reporters Felix Gillette.
I'm a writer for Bloomberg News for the global business team.
And Kim Basine.
And I'm the U.S. luxury reporter at Bloomberg.
To find out exactly how the WWE is positioning itself for an all-out global invasion, which starts with a massive change to their lucrative pay-per-view model.
WWE basically pioneered the pay-per-view model on cable. I remember as a kid, when the pay-per-view events came up, all of our friends would scramble around and try and get one of the parents to pay for it.
But in 2014, they took a huge risk.
They saw a little bit sooner than some of the other entertainment brands that where this whole thing was moving was away from cable and satellite television and towards on-demand streaming video apps. They made this risky decision, in essence, cannibalizing that pay-per-view model, which they had essentially built.
And after some early turbulence, it's working. Roughly 1.5 million people are paying $9.99 a month for the WWE app, making it the 5th most popular streaming OTT service. This adapt-or-die approach is in the WWE's DNA. Over the past 30 years, the company always seems to think 2 steps ahead. In the early 90s,
WWE was at its most threatened when Ted Turner took them on with WCW,
which stands for World Championship Wrestling. And back then, the WCW was winning the ratings war. So in order to compete with them,
WWE had changed its product from a family-friendly kind of cartoonish style to this really raw. That's why they called their show Raw. It was this raw style of wrestling.
With violent, outrageous, reality-inspired plot lines and aggressive personas.
From a 16-foot ladder!
And they won that fight against Ted Turner. And they bought WCW.
The early 2000s ushered in an era of testosterone-driven programming aimed at the red-blooded American male.
Bra and panties matches, and people smash each other over their head with like barbed wire bats and things like that.
Until 2015, when WWE fans started a hashtag Give Divas a Chance. Since then, WWE has hired 40 more female wrestlers, and that growing cast of female characters was part of a much larger plan.
They started to try to appeal to a broader set of people.
Let's attract more female fans. And after we've attracted more female fans, let's attract more international fans. They're broadening their base, and they're doing that in large part to make it more advertising friendly.
And not just friendly to advertisers.
They're trying to build up their fan base in China. They're trying to build up their fan base in Europe. They, already have a pretty good fan base in India.
India is a place where they already have an established wrestling culture.
Because of the gigantic Indian wrestler, the Great Khali. But there's still a lot of work to do. While the WWE set a revenue record in 2017, only 30% of it is coming from an overseas audience. And there's one person whose responsibility is to grow that number.
The buck eventually stops at Vince McMahon, no matter what's happening within WWE.
Yeah, he's a very controlling guy, and it's a very, very, very tightly scripted company.
And that goes all the way down the board to the big stars' entrance music. And their outfits and things like that.
So with a CEO like McMahon always planning 2 moves ahead and an aggressive push into multiple international markets, a big issue is money.
It's hard to do all those things simultaneously without committing a huge amount of capital to it.
And that's where the WWE becomes an attractive company for buyers.
Potentially, one thing that could happen with WWE is they could benefit by being acquired by a bigger technology or telecom company, an Amazon or Facebook Out or a 21st Century Fox.
So with a market cap of $2.8 billion, the advantage of owning 100% of their own content, and a rapid consolidation spreading throughout the entertainment industry, it looks like the WWE is well positioned, even if there are swerves ahead.
Our world is changing. Every day, it changes a little faster. Some changes are too small to see. Others, too big to handle. Sometimes, change feels slow. So slow, we don't even notice. Other times, it happens all at once, and we can't keep up. For our climate, change means many things. And between too small to see and too big to handle, there is a whole world of difference. The clock is ticking. This is Bloomberg Green.
Saving the seas. This week, the deep-sea diver who stopped writing the ocean's obituary to find a solution. Enric Sala tells us why the next 10 years matter most. And globalization needs to get greener. Shipping accounts for nearly an eighth of all transport emissions. How can the industry clean up its act? Plus, protecting coastlines comes at a huge environmental cost. But one Israeli startup found a way to keep the sea out and the animals in. From London, I'm Anne-Marie Hordern, and this is Bloomberg Green. After more than a decade of studying the ocean as an academic, Enric Sala realized he was writing the ocean's obituary. He quit his job and became a full-time conservationist. As an in-house explorer for National Geographic, he's clocked more than 5,000 open water dives. He's also founded Pristine Seas, a project that combines exploration, research, and media to lobby countries to protect their oceans. To date, it has helped create marine reserves equivalent to half the size of Canada. I spoke to him about his mission and why it's so urgent.
The state of the world's oceans is really bad. We have lost 90% of the large fish in the ocean. Sharks, groupers, cod, tuna. More than half of the fish stocks are overfished, which means that we are taking them out of the water faster than they can reproduce. More than half of the ocean is affected by industrial fishing, and global warming is killing coral reefs all around the world. The ocean is in a trajectory of decline.
Can you just visualize for our viewers who never get to see the kind of things you are able to see, what an ocean and healthy ecosystem looks like versus one that's next to a bustling economic and industrialized area?
Coral reefs in the United States, in the Florida Keys, are down to only 2% of what they used to be. Before, 80 to 90% of the bottom on a coral reef in the Caribbean was covered by live coral. Now, Florida Keys have only 2%. The average in the Caribbean is about 5% of the bottom covered by live coral. The rest is covered by slime and seaweed. And most of the fish you can see are this big. And it is very, very rare that if you jump into any place in the Caribbean at random, you see a shark. It's very, very rare. Now, let's go to Millennium Atoll, for example. An atoll that is uninhabited and fished south of the equator in the Central Pacific, belongs to the Republic of Kiribati. 2009, we conducted the first underwater expedition to this island, and I still remember the first time. Jumped over the side of the boat, and as soon as the bubbles cleared, I was surrounded by 15 gray reef sharks. After a couple minutes, the sharks decided that we were boring, and they went back to do their thing. And you look down, 90% of the seafloor is covered by thriving coral, and it's full of fish, and a sea turtle comes by. Now, this abundance that we rarely see anywhere except in well-managed marine reserves. This is what the ocean used to be like, and this is what we have learned from going to these pristine places.
And you write in your book that you're writing the obituary of ocean life. What's the cure?
The cure is doing less harm. Basically, there are three things that we are doing to the ocean. One is we are taking fish out of the water faster than they can reproduce. Two, we are turning the ocean warmer and more acidic because of man-made climate change. And three, we are throwing in everything that we don't want, our waste and our plastic. We need basically to reverse these trends.
Does this mean that a lot of this falls to governments and their policies?
That's a big part of it, because it is governments that regulate fishing and mineral extraction and oil extraction. It is governments that have the legal authority to create large marine reserves in the ocean. But also, local communities have an important role to play because some of the most successful protected areas in the ocean are community-led and community-managed marine reserves. So when the fish come back, the divers come in. And that creates huge economic opportunities through ecotourism. These areas that are managed by communities are very successful because the communities have a vested interest in having as many fish as possible inside them so they can enjoy the benefits.
What from the pandemic has changed your view when it comes to protection of the environment?
Nature has given us a very strong signal of how fast it can recover if we just give it space. Everybody was fascinated by all these videos of the whales and the dolphins coming into marinas and the streets of Santiago, wild goats. Nature has this extraordinary ability to bounce back if we just give it space. This is why we need to protect at least 30% of the planet by 2030.
How do healthy marine ecosystems help in the fight against climate change, though?
Most people see the ocean as a victim of climate change, but the ocean can also be a solution. Because we know that the more life there is in the ocean, big fish and big whales, the more these organisms help to make the ocean productive and absorb more CO2. Kelp forests, seagrass beds, all of these are important ecosystems in the ocean that are similar to the forests on the land, that capture a lot of our carbon pollutions.
What are you most excited about in your field?
We have 10 years to fix this problem. Global fisheries catch is going down, stocks are collapsing. Business as usual means that by 2050, 90% of the coral reefs are gone, that most commercial fisheries have collapsed. That affects food security, that affects migration of people. We have 10 years to get to peak greenhouse gas emissions and then go carbon neutral by 2050. And we have 10 years to protect at least 30% of the ocean so we can restore much of this health and productivity, not just for saving biodiversity, but also saving our life support system. We are not talking about something that is apart from us. We are not apart from nature. We are a part of nature. So these 10 years are probably the most critical in the history of humanity.
The most accurate measurements of changing oceans will come from space. While Enric Sala explores what lies beneath, a new satellite is giving us data from above.
We'll learn more about our oceans and climate change, but from space. A new satellite's been launched from California. Its mission: track the accelerating rise of sea levels.
Well, the main instruments on board include a dual-frequency radar altimeter. And this is the primary instrument of the mission, and that's the one that's measuring sea surface height, significant wave height, and wind speed over the ocean. And from those measurements, we can actually have the superb measurements that we expect of sea level rise.
Data gathered from Sentinel-6 will be used alongside information from other satellites to build as complete a picture of the oceans as possible.
With a long record, we can precisely measure the acceleration. We eventually can detect new regime, tipping points. For example, if there is a runaway in the melting of Greenland or Antarctica, sea level will record this runaway change because it is an integrator of all changes that are occurring in the climate system. So we will be able to see some change, big change in the global climate.
The National Oceanic and Atmospheric Administration expects that sea level rise will increasingly threaten U.S. coastlines. One example, the southern tip of Manhattan is expected to flood 20 to 40 times a year by 2030.
11 of the 15 largest megacities are located at the coast, and this number will double. The number of people living in coastal area will double by 2060. So, knowing how much sea level is rising at the coast and how much it will rise in the future in coastal areas is as obvious. It's obviously a major goal for human beings.
Coming up, from sails to steam to oil, the shipping industry is no stranger to change. But how will it navigate the next transition? This is Bloomberg Green. From Bloomberg's European headquarters in London, I'm Anne-Marie Hordern. This is Bloomberg Green. Now, for your roundup of this week's latest climate news, Jennifer Zabazaja has your Green in Brief.
Here's the climate news you need to know. Deforestation of the world's largest rainforest has hit a 12-year high. More than 4,000 square miles of the Amazon rainforest was destroyed in 2020. That's a 9.5% increase from a year earlier. Government data shows that destruction has soared since President Jair Bolsonaro took office and weakened environmental enforcement. The Amazon is home to millions of species and plants and is critical in the fight against climate change. Bitcoin is hitting all-time highs, but at what cost to the environment? The cryptocurrency is energy intensive, and there are concerns if it becomes mainstream. According to MIT, back in 2018, Bitcoin's carbon footprint was almost as big as Portugal's. Want to get better at tackling climate change? We'll hire more women. That's according to Bloomberg New Energy Finance. Firms with 30% or more women in top jobs tend to perform better when it comes to the environment and are more likely to set clear climate goals. Shopping online is more popular than ever now, but the price of convenience is measured in CO2, and more deliveries means more fuel burned and more packaging wasted. So what can companies do? Well, many are becoming more efficient and sourcing more clean energy for their data centers and warehouses. And England's farmers will be paid to go green after Brexit. As European subsidies are phased out, they'll get new money to encourage them to produce healthy, sustainable food. Poor farming practices are one of the leading drivers of water pollution and the loss of biodiversity. I'm Jennifer Zabazaja in New York. Anne-Marie, back to you.
The shipping industry is more than just the grease on the wheels of globalization. It's its chief enabler. 11 billion tons of goods are transported by ship each year, the biggest contributors being 2 billion tons of oil, 1 billion tons of iron ore, and 350 million tons of grain. According to the International Chamber of Shipping, 80% of Europe's imports and exports happen over the seas. And for such a vast industry, it also contributes its fair share of emissions. Shipping makes up 12% of global transport energy consumption. So how does it clean up its act? Earlier, I caught up with Bloomberg Green reporter Laura Milan about just how big of a challenge this is going to be for the industry.
One of the main issues is size. So about 90% of the world's cargo is moved by ships. So obviously changing such a huge industry is not going to be fast and it's not going to be easy. The second issue has to do with technology. So ships obviously travel for many days at sea. It's not as easy for them to refuel as it would be for a car, for example, going on a road. And the sector still hasn't found a technology that's economically viable and that's zero emissions and equivalent to the electric batteries for cars, for example.
But actions are being put in place to make the industry a bit more environmentally friendly. Walk us through those steps that they're taking.
That's it. So there's a first step that would involve using low emission fuels or biofuels that would significantly reduce the existing emissions. And then at regulatory level, when it comes to the policy and the governments, there are steps being made as well. I would say that the most significant ones come from the European Union, which started to track emissions a few years ago and is now looking to include shipping emissions in the emissions trading system. So that would significantly reduce and help calculate the emissions from the shipping industry. Now, China is taking similar steps. So at the moment, regions need to report shipping emissions to the central government. And finally, we have the International Maritime Organization with a pledge to reduce shipping emissions by 50% in 2050. Now, we must say that that pledge has been considered insufficient by environmental groups, but at least some steps are being taken.
So to get to 2050, the industry obviously is going to need to start tapping some new technologies. What new technologies are you seeing being introduced into the shipping industry?
So we have seen pilot technologies being developed for years now, but what's interesting about this current moment is that we're seeing big players invest in these technologies that are not yet economically viable, but that one day might be. So for example, we are seeing earlier this year, the world's largest agricultural commodities trader, Cargill, saying they will invest in attaching sails to their ships so they can make any technology that they run their ships on more efficient. Similarly, we have seen a spin-off of Airbus, the aeronautics company, developing a similar application with kites. We have been following also developments in hydrogen. So at the moment, hydrogen fuel seems like a good option, a possible option when it has been developed and when it becomes economically viable. And we have Vestas, for example, the world's largest turbine maker, developing some ships that will be able to run on hydrogen in the near future.
Coming up, rising sea levels means humans need to get creative when it comes to coastal defenses. But how do we protect both ourselves and the environment? One Israeli startup may have the answer. That's coming up next. This is Bloomberg Green. In London, I'm Anne-Marie Hordern. This is Bloomberg Green. After water, what's the resource that humans use the most? It's concrete, 3 tons a year for every person on the planet. And engineers estimate it's used twice as much as all other building materials combined. And it comes with a huge environmental cost. Concrete, not just in cities, it's a common feature on our coastlines too. And that's taking a toll on biodiversity. But one Israeli startup has found a way of making sea defenses stronger and encouraging life to thrive.
If you take a look at concrete structures like breakwaters or seawalls, the water around them is often clear. That's not actually a good thing, because it means there's no life. Marine species are actually most abundant in coastal areas, but it's also where us humans prefer to live too. So when we build here, we drive away marine life.
The concrete in the marine world has a lot of additives, a lot of chemicals, and some of those materials are actually leaching out, and they're actually prohibiting marine life to thrive. If we keep developing without any regards to natural communities, there is a tilting point from which beyond we cannot really go back.
In the coastal city of Tel Aviv, an Israeli startup wants to revolutionize our urban coastlines. Their sea defenses are transforming lifeless man-made structures into teeming ecosystems. They do this by replacing standard concrete with their own special cement formulas.
As opposed to regular cement-based concrete, e-concrete includes certain elements that enhance the growth of marine flora and fauna of plants and animals. Our admix, which is kind of our secret sauce, is basically kind of sealing the concrete, making it less aggressive for the marine environment. That once we add it, we enable life to flourish.
In the lab, the team run tests to identify what mixes will work best for marine life.
So we take really ice cube sized concrete slabs of different compositions, and we put larvae, 20, 30, 50. We need to have a lot of replicates. We're geeky scientists, so we have to have a lot of replication and controls. And then within a few days or just a few weeks, we can get an answer on their preference. So obviously if they die, they have a very low tolerance to that specific concrete mix design. And if they thrive or they flourish, we can quantify that very quickly.
E-concrete says it typically sees double the biodiversity of regular grey concrete. From fish and sea caterpillars on their armour blocks to crabs on these tidal pools that sit on the shoreline.
This unit holds water during the low tide, so it's always moist, and therefore it has a very comfortable habitat for crabs and sea anemones and sea stars, etc. These pools have been here for less than 3 months, and this is already what you can see. It's covered with life. See the rock around it, which has been here for probably 10, 20, maybe even more years, only has a thin layer of green algae, and that's it.
As well as the composition of the cement mix, E-concrete designs its products specifically to the marine environment it will be deployed, to create niches for endangered species, or to develop nurseries like these oyster beds. The final part of the equation is creating complex surface textures to mimic natural rock or coral, an environment that helps anchor young organisms.
When concrete elements are being cast, the typical goal is to have a very slick surface, very, very smooth. The idea is to get the water to flow right across it. When we're designing e-concrete with a rough surface, we want to do the complete opposite. We want to slow the water when they are crossing the structure so that the larvae can actually adhere and attach to the surface.
E-concrete has to offer its clients more than just ecological credentials. Over time, they've discovered that creating hospitable habitats for marine life adds another advantage, one that is surely hard to ignore.
We've seen evidence to the fact that the growth of the organisms on the concrete create kind of a layer of defense. Just the addition of weight, we can actually gain stability and strength over time.
This is let's say the unit when we put it in the water. And this is after a year in the water. And what you can see here is all the oysters are completely covering it. We designed the units so they can withstand the forces and perform in terms of structural performance, but they can also be a backbone for ecological enhancement.
The company tests its miniature designs in tanks full of real seawater, rocks, plants, and animal life from around the world.
What we're looking for is the accumulation of calcium carbonate on the surface of the concrete of different mixes and different designs. This is the process that we call biogenic buildup. So with time, we get a buildup of calcium carbonate that is sourced from marine organisms on the surface of the concrete. And we actually encapsulate the concrete with a natural rock. So when the organism dies, in the case of a coral, it will die, and then another coral will sit on it, and that's how a reef is growing.
The hope that our man-made structures could become stronger over time also means better economics. The units require less maintenance and could therefore stay in the water for longer. E-concrete, though, is just a few years old, so it needs more time to really quantify the longevity of its products. But the company are certain their products are better for the environment, and not just in terms of improving biodiversity.
We're kind of trying to offset some of that immense carbon footprint of the concrete industry.
Construction is responsible for about 11% of global carbon emissions. By adding a biological crust to their products, e-concrete prevents some CO2 from being released into the atmosphere.
For every kilogram of calcium carbonate being created by those marine organisms, we're offsetting 120 grams of CO2. So think about building a port infrastructure or a city waterfront that is an active carbon sink. I think that's a great advantage of the technology.
That does it for this week, but let's keep the conversation going on Twitter. Follow us at Climate. I'm Anne-Marie Hordern, and this is Bloomberg Green.
This is Bloomberg Business Week. Insight from the reporters and editors who bring you America's most trusted business magazine. Plus, global business, finance, and tech news as it happens. Bloomberg Business Week with Carol Masser on Bloomberg Radio.
Good Tuesday afternoon from New York City and points beyond to our worldwide audience. I'm Paul Sweeney, and I'm joined by Alex Steele today. We are sitting in for Carol Masser. The stimulus drama, that continues to play out in Washington with debates centering on the size of the stimulus checks. Is it $600? Is it $2,000? We'll have more color on that throughout the afternoon. Plus, we'll get the latest on the virus and the vaccine rollout, which is proceeding slower than most would like, including Dr. Fauci. But first, let's get a look at the numbers, and we could do that with Charlie Pellet.
Thank you very much. And here's what's going on. Right to the numbers. Give you the story in a moment. S&P down 3, a drop there of 0.1%. The Dow narrowing its loss, now down 68 points. Have been higher for much of the morning, down now by 0.2%. Nasdaq down 33, a drop there of 0.3%. The real damage, though, in small cap land today. Russell 2000 down 2%. Stocks are slumping. Small cap shares on track for their biggest drop in 2 months. All of this as prospects for bigger government aid checks to individuals fades. We will have more on the topic right through the afternoon, right here on Bloomberg Business Week. 10-year yield 0.93%. Gold up 0.2%, $18.77 the ounce. West Texas Intermediate crude up 0.6%, $47.91 a barrel right now on WTI. I'm also keeping an eye on Intel shares. They're up by 4.4%. Intel rallying on word that hedge fund Third Point is building a stake and wants the chipmaker to explore strategic alternatives. Recapping, S&P now down 0.1%, down 4. I'm Charlie Pellet. That is a Bloomberg Business Flash.
Charlie Pell, thank you so much. We appreciate that. Let's kick off the Bloomberg Business Week agenda for today. We do that with Vince Signorella, global market strategist for Bloomberg News. He joins us on the phone from White Plains. So, Vince, again, as I look at the tape throughout the day, it's what you would expect in the week between Christmas and New Year's here. I'm going to start with the dollar here. You know, we love getting your perspective on the dollar. Another weak day for the DXY index. We actually touched 89 here, so we're sitting right at about 90. I remember the days when we were mid to high 90s not too long ago. Talk to us about kind of the trade that you're hearing for the dollar here.
Well, pretty much the majority of people are short dollars. They continue to think that going into 2021, there'll be continued stimulus coming out of the president-elect's administration, which would suggest the Haven trade would be a sell, and that would be a sell of the dollar. So there's a lot of interesting things to look at going into next year. While it may originally be, for instance, if the Democrats were to take the Senate in a week or so, you would expect that Haven trade to be sold off, as more stimulus would certainly come. And that would be an initial dollar sell-off. However, you'd also see a big sell-off in treasuries, a big jump in yields. And we would eventually, can't say exactly when, but eventually, perhaps even sometime in the first quarter, reach a level where the real yield for returns in holding dollars is very attractive to other countries, especially those with negative yields. So that short dollar trade could be in a great deal of jeopardy very early on into next year if we get a Democratic sweep and a big risk-on scenario as the second part of that leg trade. First, the dollar would go down, but then I think it would come up very quickly.
Yeah, that's interesting. I think a lot of folks are expecting, again, looking very closely at that January race in Georgia, just to see what type of mandate President Biden would have within Congress here. What do you make of kind of the back and forth over the past couple of days of this current stimulus package, kind of going back and forth about how much money individuals will receive? How are the markets just kind of looking past that?
Well, I think the markets basically see this as a situation where when Trump signed the bill over the weekend and suggested it be 2,000, he's really backed Mitch McConnell into a corner. He sided with the Democrats almost a second after he said that. Pelosi was all on it, saying we agreed, the House passed it. So now McConnell's in a position where if he doesn't pass it or doesn't bring it to a floor vote, he looks like the Grinch. And that may put the Republican Georgia Senate in some jeopardy for the Republicans and make it a foregone conclusion as we head into a new Senate, a new Congress. He's already blocked the bill from reaching the floor to quickly pass the checks. And there is talk that he's going to tie Section 230 to it. If he does, it pretty much would kill the deal if they let it go to the vote as they have. But here's one for you, which I learned this morning. I'd never heard of this. There's a little known debate tactic, a procedural maneuver in the Senate, and it's called the clay pigeon, which means the Democrats could enact this, which would separate all the addendums to the bill so that each part of the bill has to be voted on separately. Which means 230 would be voted separately, the stimulus would be voted separately, and in that case, if Senator Josh Hawley is correct as what he tweeted this morning, they have the votes to pass the stimulus, and the stimulus would pass.
It seems like that would be an issue for timing, though. That would gum up the works a little bit. What's the thought there?
Well, the thought is we're still waiting. We're still waiting for McConnell to see whether or not he'll put it on the floor for a vote.
Sure.
But he's moved first towards overriding the veto of the defense bill. And now, that'll obviously come first because he's going to put that on the floor first. Will there be time to put the stimulus on the floor today? I don't know. Certainly will be time tomorrow if he should choose to do so. Can't figure out the politics of Washington that easily, to be honest. I wish I could.
So, Vince, I think the consensus bull call for risk assets for 2021 is pretty straightforward, which is, A, we've got the vaccines. That will drive better economic expansion, mid part of the year onward. We still have an extraordinarily accommodative Federal Reserve. We've got Brexit behind us. We presumably have more political stability in Washington. I mean, all that sets up for a pretty risk-on trade here. If you were to stick a pin in that balloon, what would that be?
Well, the first pin I guess I would stick in it would be that the Senate stays Republican. And you could see the way McConnell's sort of pushing back on things now. You know, typically when you have a divided government, markets love it because nothing gets done. This time is different. Given the virus, you're going to need the government to get things done. And if there is a divided government and things stall, that very much could be the first pin in the bubble. The second, of course, would be this variant strain of the virus and how quickly and fast it spreads. You know, the back end of the year looks reasonably good as the vaccine gets passed around, as more and more people take it. Hopefully, a lot of people will. And it suggests that the second half of the year is going to be great. Doesn't tell us how bad the first half of the year, or at least the first quarter, would be. And that's a part I think people just keep looking past, and I don't. I can't look past that, to be honest. I think this could be pretty ugly. The vaccines right now are being administered at a very slow pace. They're not going out as quickly as people would like, or as we had first heard. So there's a lot of things that could upend risk. In the end, it'll look fine.
Right.
But can you bear the pain to get there?
Can you bear the pain to get there? And that pain presumably is a Q1, Q2 type scenario. Vince Signorella, thanks so much for joining us. Vince is the global macro strategist for Bloomberg News. He's been trading on the street for decades. He knows what he's talking about across asset classes, and he joins us on the phone from White Plains, New York. Alex, I got one for you today. I know you just got off TV, but here is our bite of the day. Okay, you ready for it?
Ready.
It is time, here we go, for the Bloomberg Bite of the Day. One number that tells us a lot. Today's number is $30,000. Bitcoin's rally, I know you want to talk about Bitcoin, is only a matter of time. It's rallied at $30,000. It will face ups and downs, but it's here to stay. It's not a question of if it will approach the number, but when. As far as nominal price levels go, overtaking the Dow index is even less meaningful for the cryptocurrency than when it surpassed the spot price of gold in 2017. You can read more about Bitcoin's use on the Markets Live blog on the terminal.
I don't know. I mean, if you hear that, it's not a question of if or when. When it comes to market stuff, aren't you kind of like, let me rethink that for a second. Come on, you used to work on the street. If someone came to you and they were like, definitely going to happen, no way it's not going to happen.
I get on the other side of that trade.
That's what I'm saying.
That's what I'm saying, but this is a little odd, this whole Bitcoin thing. It's not like buying stock or pork belly or something. Something's different here. Right now, let's head down to Washington, D.C., our 99.1 studios, to Nancy Lyons for world and national news. Nancy.
Thanks, Paul. The Senate will not be quickly taking up a proposal to increase stimulus checks included in the latest relief proposal from $600 to $2,000. Today, Senate Minority Leader Chuck Schumer tried to bring up the bill, but was turned away by Senate Majority Leader Mitch McConnell.
That the bill be read a third time and passed, the motion to reconsider be considered, made, and laid upon the table with no intervening action or debate.
Is there objection to the modification?
Object.
The House passed the increase yesterday by a 2/3 majority, and it is supported by President Trump. Vice President-elect Kamala Harris and her husband are among the growing number of high-level officials who've received a coronavirus vaccine. She received it on camera today at a Washington, D.C. hospital. President-elect Joe Biden, Vice President Mike Pence, House Speaker Nancy Pelosi, and Dr. Anthony Fauci have all been vaccinated. But Fauci tells CNN the pace of vaccinations is slower than expected.
We certainly are not at the numbers that we wanted to be at the end of December. You heard talking about 40 million doses for 20 million people. I mean, even if you undercount, 2 million is an undercount. How much undercount could it be? So we are below where we want to be.
President-elect Joe Biden will address the slow rollout of vaccines in remarks this afternoon. The troubled Boeing 737 MAX returned to the skies today. American Airlines Flight 718 traveled from Miami to New York City with about 100 passengers on board, including the airline's CEO. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Nancy Lyons.
So, Alex, just to follow up on Nancy's reporting there and Dr. Fauci's sound here, interesting reporting on the Bloomberg terminal today. New York City vaccinates more than 67,000 people. I guess that sounds okay, but it's administered 67,116 COVID vaccine as of Monday night. But that's only about 17% of the total delivered to the city. So it just raises that question once again, which Dr. Fauci was talking about, which is, boy, we're really not doing a great job in actually getting the vaccine into people's arms. And that's a little bit frustrating, I think, here at the beginning.
Well, I mean, I feel like there's a couple schools of thought. One is like, okay, this is normal stuff. Like, you're doing this huge rollout. There's going to be some hiccups. And the other is that the stuff we thought that was going to matter, like the cold storage and the actual distribution, transportation, production, maybe wasn't as much of a problem. But literally, like, how do you pick the people to get vaccinated? Like, once you get through the healthcare workers, like, how do you pick them? Where do you go to find out? How do you track your second shot? Like, stuff like that, which people have no idea what they're doing.
Yeah, and I have to admit, I've been surprised to see politicians, elected leaders, getting shots, getting vaccinated before frontline workers, before the elderly. Irrespective of their politics and whether they supported, mask wearing and social distancing, it just seems like, they're not that first responder. Yet I would think from a political perspective, I wouldn't want my constituents seeing me getting vaccinated before the local nurse in my town.
Yes. But there's also the anti-vaxxer campaign, and then people who aren't anti-vaxxers but are still nervous to get it. So you could say, okay, it's public health. You're trying to instill confidence in the vaccine, but certainly no one who's taken it yet has had that problem. To your point.
Exactly right. So I think, there's been reports of some side effects, and we'll have a guest later to talk about kind of the vaccine and kind of what some of the early feedback is. But it's interesting nonetheless that the vaccines are being shipped. It's now just a question of getting them into people's arms as quickly and as efficiently as possible.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business
From Bloomberg World Headquarters, I'm Charlie Pellet. Stocks are slumping. S&P just about at the low of the session right now. Small cap shares, though, heading for their biggest drop in 2 months as prospects for bigger government aid checks to individuals fades. Russell 2000 index down now by 2.2%. The S&P is down 9, a drop there of 0.3%. Again, close to the worst level of the day on the S&P. The Dow is now down 114, down by 0.4%. And NASDAQ lower by 49, a drop there of 0.4%. 10-year yield, 0.93%. Spot gold up 0.2%. 1877 the ounce. And West Texas Intermediate crude up 0.5%. 47.85 a barrel. I'm Charlie Pellet. That is a Bloomberg Business Flash.
Charlie Pellet, thank you so much. We appreciate that. You know, I think the discussion point of the day for this pandemic has been the vaccines, the distribution and availability of the vaccines, and how quickly is that occurring. And then once we do get the vaccines, how are people reacting? So let's get the latest. We can do that with our good friend, Dr. Ian Lustbader. He comes on our show often to give us the latest intelligence. Dr. Lustbader is a clinical associate professor of medicine at the NYU Langone Medical Center, joining us on the phone from New York City. Dr. Lustbader, thanks again for joining us. I understand you took the vaccine. Can you tell us about your experience taking the vaccine and then maybe any side effects you may have had?
Absolutely, Paul and Alex, thanks for having me on. The vaccine really, for me, was not bad at all. That was last Wednesday. And there is, for many of my colleagues who took them, there were about 150 people that day here at the NYU Center for Men's Health. And we've done, several thousand really throughout the city. Usually it's a localized pain, very similar to a flu shot. So you have some soreness at the site, usually for 24, sometimes a little bit more than that. I didn't even take Tylenol, so I was sort of underwhelmed. But remember, that's the first shot. Many people seem to have a little bit more of a side effect after the second shot. And colleagues of mine who are physicians who had COVID and appropriately said, you know what, we know the vaccine gives us higher antibodies for a longer period of time. Several of them also took the vaccine, which was appropriate. A couple of them actually seemed to have a little more severe reaction, some fevers and some aches. So it does seem perhaps that in the people who've had COVID who take a vaccine, again, that's appropriate. We think it does boost your, the length of the immune response. They seem to have a little bit of a harder time with it.
Interesting. That's the first I've heard of that one. Technical question. So you go and you get your vaccine. How did you know when to get it, where to go? How do you know when to get back for your second dose? And I know that you might be in a different situation because you work at NYU Langone and you're a doctor, but I'm trying to understand where the issue is with getting the shot in people's arms.
So you're totally right that we all need to do to kind of roll this out more, and we can talk about that. But at least at NYU, I think it's really quite efficient. Almost everyone is on an electronic medical record system. It's called MyChart. Everyone has a record. You are pinged when your shot is available. You then schedule a date and time. Show up for it. Sometimes there's a bit of a wait. Everything does not go off exactly on schedule. But it was pretty seamless, I must say. First day there was a real surge of physicians and nurses, and we continue, to bring people in. And so really the chart notifies you when you're ready. It notifies you to make a date. Hopefully you show up for that. And then you have the staff available, to give it to you. And generally, this is daytime hours. Some sites are running on Saturday. So basically, as many as can be scheduled during that, essentially 8 to 5 hour time frame is done.
So is the expectation, Doctor, that as we get this to more broad rollout, the city, to some degree for people in New York City, the city will have, the sourcing of the batches and then we'll allocate them to various distribution places, whether it's a hospital or a doctor's office?
Yes, that's exactly it. We've already had a lot of doses allocated. I think New York State is somewhere around 900,000 doses. In the city, it's only been about 55,000. This is what I'm hearing from, the sources, shots actually given so far, and I think total New York State is about 90,000. So there is a gap between what is available and actually physically giving those shots out. And, at one point we had heard about the military or other people doing it. To my knowledge, that's not happening. The medical centers and offices are giving it out, as hubs. It comes to a hub, especially because of the refrigeration that's needed. So they're sort of come to a main hub like NYU. They're then distributed to several sites under normal refrigeration, and then you have X amount of time to distribute them. And basically on a daily basis, they are couriered to the sites when they're then distributed throughout the day. So it is not the logistics, I think, are slowing this up a little bit. It's not those lines of people waiting in the old days for mass vaccinations. Even whether it's at CVS where people would just come in because of restrictions and scheduling. It's going to be unfortunately a slower process, but that's my take on it.
When we start vaccinating the ordinary population, how are those people going to get that information? Is it their primary care physician? Are they going to have a number? How does it work?
So it's unlikely, it's going to be a while before the primary care physicians are doing it. Once we get the healthcare providers vaccinated, and this is according to our more senior administrators, once the doctors and nurses and frontline people in the ICUs and so forth get the shots, and we're in the process of doing that. The next group, my understanding, is 65 and older. And at least for the patients who are on the MyChart system at NYU, they will receive an electronic message as often they communicate, just as patients can reach me by sending me a message. NYU sends out this sort of mass information. Here are the people who meet the criteria. They then schedule an appointment, and I believe some of them will be at this office, at this hub where we do have the vaccine. They will have to schedule it, and then they will come in and not past a certain amount per day.
All right, Dr. Lustbader, stick around. We're going to do a little bit of news here. Then we're going to come back to you and get some more information on this. We're going to talk about this, some of the new strains we're seeing of this virus and kind of what that means vis-a-vis the vaccine. We've certainly seen some strains in the UK that have really been concerning there, and the expectation is, of course, it will at some point get to the US. So we'll talk about that and everything else we need to know about the vaccines coming up. This is Bloomberg.
Broadcasting live to New York, Bloomberg 1130. To Washington, D.C., Bloomberg 99.1. To Boston, Bloomberg 106.1. To San Francisco, Bloomberg 960. To the country, Sirius XM Channel 119. And around the globe, the Bloomberg Business app and BloombergRadio.com. This is Bloomberg Business Week.
This is Bloomberg Business Week. I'm Paul Sweeney alongside Alex Steele. We are sitting in for Carol Masser. Coming up, we're going to talk with Dr. Ian Lustbader, again, a clinical professor of medicine at NYU, get the update on the virus and when we may see a peak in infections. But first, let's get a Bloomberg Business Flash from Charlie Pellet.
Thank you very much, Paul. Thank you, Alex. We have got the Dow, the S&P, NASDAQ at or near session lows. Stocks are slumping. Small cap shares heading for their biggest drop in 2 months. Prospects for bigger government aid checks. 2 individuals fading. Russell 2000 index right now down 2.2%. To put that in perspective, the S&P is down 0.3%. S&P lower by 10 right now at 3725. Dow Jones Industrial Average down 104, a drop there of 0.3%, while NASDAQ is down 59, a drop of 0.5%. 10-year down 230 seconds, 10-year yield 0.93%. Gold is up 0.3%. Spot gold at $18.78 the ounce. West Texas Intermediate crude at 48.01 right now, up 0.8%. New York's COVID-19 cases have risen 1.2%. That is in line with the 7-day average. And just getting word from Governor Cuomo that he is shortening quarantine guidelines in New York State to 10 days. That is on CDC advice. The government's top infectious disease doctor says the country's vaccination rate is lagging, and he's expressing concern about a post-holiday coronavirus surge. Anthony Fauci said on CNN that officials had hoped to have more people vaccinated by now. President-elect Joe Biden will be addressing the slow rollout and outline his plan to pick up the pace. Those remarks coming up at about 3:45 Wall Street time. We'll have those remarks for you live here on Bloomberg Radio. Dr. Amish Adalja is senior scholar at the Johns Hopkins Center for Health Security, and on Bloomberg Radio and television this morning, he too warned of more cases to come in the United States.
It's inevitable that we're going to see a spike in cases. You have to remember that this virus thrives on social interaction, and many people traveled from one state to another and went to private gatherings where likely they let their guard down, didn't wear face coverings as meticulously as they should have. So we're going to see some level of transmission. Hopefully it's not something that really puts us kind of on a surge on top of a surge on top of a surge, to borrow Dr. Fauci's phrase, but it's likely that we will see some level of increase at a time when we already have record numbers of cases and record numbers of hospitalizations.
The Johns Hopkins Bloomberg School of Public Health is supported by Michael R. Bloomberg, founder of Bloomberg LP and Bloomberg Philanthropies. Among some of the vaccine names, Pfizer up 0.4% right now, BioNTech down 0.5%, AstraZeneca up 1.1%. Those are the ADRs traded here in the U.S., and Moderna is up by 1.7%. Boeing 737 MAX has returned to commercial service in the U.S. The first flight since 2 deadly crashes prompted the longest aircraft grounding in the nation's history. An American Airlines 737 MAX landed at New York's LaGuardia Airport at 1:10 p.m. Wall Street time, slightly ahead of schedule. Boeing shares today, they're down 0.2%. American Airlines Group shares down 1.3%. Recapping, stocks lower, S&P down 10, down 0.3%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
Thank you, Charlie Pellet. So still with us, Dr. Ian Lustbader, a clinical associate professor of medicine over at NYU Langone Medical Center. We were just talking about what it's like to get a vaccine, how you wind up lining up people to get their shot, how that's all going to work. But it's like we're getting ahead of ourselves, doctor, because first we're dealing with the virus that's in the here and the now. And that brings me to the new strain that we saw in the UK and that seems to be spreading all over the world. What do we know about that new strain?
Well, we certainly know that in the UK they identified this, and we also know that viruses mutate. We see that with the influenza virus, that we need a new vaccine every year because there's significant mutations. In this case, we think there are probably several reasons why the virus mutates. Already there have been a number of mutations, somewhere in the range of 14 or so, and likely that is due to selective pressure. if the virus is too deadly, you kill off your host, and that's not good for the virus. So if you can increase transmissibility, in other words, make it easier to spread, great, the virus reproduces better. And if it's a little less lethal, you keep your host alive longer to infect other people. So there is this selective pressure, not just for this specific coronaviruses, but many other viruses over time to become a little less deadly. And we are seeing the case fatality rate come down a bit. But the numbers of cases, and with something called the R0, the number of people you can infect when you're infected has gone up. And that's a concern. I think we're going to see continuing rise in numbers because of that. And I think there's some evidence that that variant is here, or if not, probably will be here, even if you cut off flights. As you know, people can be asymptomatic. They can harbor it. So I think it would not be surprising to see our numbers go up in January, both due to holiday gatherings, probably as well as due to new strains that are appearing.
So that's kind of where I wanted to go, Doctor. I mean, as I think back to that first wave in March and April, we were all hanging on. It seemed like every word from Governor Cuomo in his daily press conferences and looking at that chart and learning a new term, which is bending the curve. When do you expect that we will see a peak in new infections in the United States here in this latest wave?
Yeah, we unfortunately did not do a great job in bending the curve, really due for a variety of reasons, public health issues. Everyone was not wearing masks and really doing adequate social distancing. And unfortunately, by sort of prolonging this, we've paid a price, I think, economically by these sort of shutdowns on and off again. My sense is I think we're unfortunately going to peak into late January and February, most likely. There's about a 4 week delay with all of this. So I suspect that's when it will occur. We will be getting more vaccine. I think we've had a problem with distribution with the vaccine. Part of it is the sub-zero Pfizer temperatures. I think as Moderna comes out, as AstraZeneca comes out, as J&J comes out, it will be easier, and hopefully distribution will be easier. Of course, all of this would have been easier had we had a universal health record where everyone is on the same electronic record. You can communicate with large numbers of people. Otherwise, mass vaccination is not easy to do. But my sense is that we're going to see some unfortunate numbers later in January.
Real quick, how are we doing with deaths?
The case fatality rate is down. We've changed our approach to treating people. We're often less aggressive in putting people on ventilators. So that's the good news. The problem is a surge where you can overwhelm hospitals, and that looks like that may be happening in various areas, which is the downside. So although case fatality rate is down, the numbers really are climbing uncomfortably.
Dr. Ian Lustbader, thank you so much once again for joining us and sharing your knowledge and wisdom of as we deal with this virus. And now the good news, the vaccines. Dr. Ian Lustbader, Clinical Associate Professor of Medicine at NYU Langone Medical Center, joining us on the phone from New York City. We always appreciate the perspective from the good folks at NYU Langone School of Medicine. Right now, let's head down to Washington, D.C., our 99.1 studios. Nancy Lyons for World and National News.
Thanks, Paul. Senate Minority Leader Chuck Schumer says the Senate needs to stay in session until votes are held on two key measures.
President's veto of the annual defense bill and the effort to send $2,000 survival checks to millions and millions of American families.
Senate Majority Leader Mitch McConnell says he'll take up a veto override of the defense bill tomorrow, but he turned away efforts today to raise those stimulus checks to $2,000. As for the $600 checks approved in the latest round of stimulus, New York Governor Andrew Cuomo says he expects them to show up in accounts next week. Vice President-elect Kamala Harris has received her COVID-19 vaccination.
That was easy.
While top officials are receiving their shots, the nation's top infectious disease expert says the country's overall vaccination rate is lagging. And Dr. Anthony Fauci tells CNN he's concerned January's coronavirus numbers will be worse than December's. But Professor Andy Pekosh with Johns Hopkins Bloomberg School of Public Health tells Bloomberg he's not overly concerned about the slow rollout.
I think it's just a hiccup. I think we also have to remember that the vaccine rollout is happening during the holiday season, and places aren't as staffed as highly as they should be. We're trying to take care of COVID-19 patients as well as administer vaccine.
Johns Hopkins School of Public Health is supported by Michael Bloomberg, founder of Bloomberg LP, the parent of Bloomberg Radio. President-elect Joe Biden this afternoon will discuss the slow vaccine rollout. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Nancy Lyons.
Alex, as if our good friends on Long Island don't have enough problems like we all do with the COVID, they now have to worry about their drinking water. There's a Dow Jones story on the Bloomberg today that is just fascinating. Long Island earned a distinction in 2016 it didn't want. Some of the region's drinking water was found to have among the highest levels nationwide of 1,4-dioxane. That's a bad thing. A chemical the U.S. Environmental Protection Agency calls, quote, likely human carcinogen, but doesn't regulate it. So now the question is, do you spend tons of money putting in a new filtration system for those affected areas? Or, as some people are suggesting, maybe just say, hey, why don't you give us some of New York City's drinking water? That is, quote unquote, pristine water supply. So those are some of the issues that people are banning about as they try to deal with the drinking water issue that we're seeing on parts of Long Island.
Okay, so lots of thoughts. But the first is, and I have always said this, New York has the best drinking water in the country, and people think you're crazy if they don't live here because they're like, New York, it's totally gross. And you're like, it is not. It is really good. And I didn't know this, but apparently Long Island gets its water from underground wells versus New York, which water, by the way, is quite good. The pipes, I don't know about the pipes. That's a different story. But the actual quality of the water is excellent.
Yeah, so the question is, again, I think it's obviously you need to address this issue, and there's again a couple of options at least under review, but you can presumably filter this in a better way on Long Island, but of course that takes lots of money, and the question is who's going to pay for that. And then the question is there enough supply from New York City to supply Long Island? And a lot of folks believe the answer to that is yes. So it's a big issue for those affected areas on Long Island. And you think about some of the reservoirs in upstate New York, and they're some of the most pristine areas you'll ever find.
What's New Jersey like? Jersey water,
good.
Not good.
Actually, the town I live in, not good, but generally pretty good.
Really? I always felt like it was chlorine to me.
Yeah, it could be. But, it's Jersey. We need our chemicals, I guess. So anyway, we'll have more coming up. This is Bloomberg.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. The Dow, the S&P, NASDAQ at or near session highs on this Tuesday, holiday shortened trading week, but stocks are slumping. Small cap shares on track for their biggest drop in 2 months. Prospects today fading for bigger government aid checks to individuals. The Russell 2000 index down now by 2.3%. S&P is down 12. That is a drop of 0.3%. NASDAQ is down 69, a drop there of 0.5. The Dow is down 103, a drop of 0.3%. 10-year's down 3/32, 10-year yield 0.93%. Gold is up 0.3%, 18.78 the ounce, and West Texas Intermediate crude up 0.8%, 47.99 a barrel on WTI. Intel shares are rallying on word that hedge fund Third Point is building a stake and wants the chip maker to explore strategic alternatives. Intel shares, they're trading higher now by 4.8%. Recapping, stocks lower, S&P down 10, a drop of 0.3%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
Charlie Pellet, thank you so much. We appreciate it. Boy, a fascinating story in the Bloomberg Business Week this week. It's about how a charity, this one in Canada, the Superstar Founders, how they innovated its way to political scandal. It's a kind of just a really deep story that you can sink your teeth into. Let's get to it. Joel Weber, editor, Bloomberg Business Week, joins us on the Access line from Brooklyn. And Danielle Bokov, she is the metals and mining reporter for Bloomberg News. She is in Toronto. Joel, just a fascinating story here, how these two brothers came together, built up this really amazing philanthropic organization, and then it kind of just went downhill recently. Tell us the story.
Yeah, so it's been a dramatic year for We Charity. And if you're not familiar with this is like a superstar charitable organization based in Canada, and it has had this dramatic rise over decades. And really, if you think about where they were a year ago and where they find themselves right now, I think that there's just been, COVID's hit everyone, but I think in particular, this organization found that it was not only derailed from its main sort of a way that it would have been able to fundraise and make money, but then on top of it, it also found that it acquired a form of scrutiny that it was sort of unaccustomed to. And I think that is ultimately where Danielle and Natalie's reporting in this story is so dramatic. So Danielle, can you tell us a little bit more? And one of the things that I find so interesting about this is you obviously being in Canada. What is We Charity and particularly the co-founders, two brothers, the Kielburgers, what have they been known for?
They're really well known here, and they have been for some time, Joel. They started out as Free the Children, which was a charity founded when Craig Kielburger was only 12 years old to combat child slavery. So he was a child activist, and then he and his brother Mark kind of built this organization up. And they moved into other work in developing countries, so building schools, providing clean water, those sorts of projects. But they also did a lot of educational work in Canada, especially, and also in the United States and the UK. So, they would go into classrooms, for example, and teach school children in the developed world about philanthropy and inspire them to volunteer or to fundraise, often for We Charity, but for other causes as well. And I think what's sort of interesting is just how encompassing their reach was. So they had a lot of big corporate donors, they had celebrity supporters, scores of school kids, and were just sort of generally really well connected in Canada's elite establishment, which is still pretty clubby. And then the other thing they were really famous for were these We Days, which were these kind of massive jamborees, these really feel-good events at stadiums with pop stars, where some of the school kids in the developed countries who were really involved, they were called change makers, were essentially rewarded for doing good deeds by getting to attend. And that was kind of like, in a nutshell, they have a complicated business model, and that's kind of it in a nutshell.
Yeah, and you were saying, celebrities, like, they're mentors by the likes of, like, Oprah, for example. So what happened? Where did things go wrong this year?
Yeah, so Joel mentioned that COVID was a blow to them. Me to We, which is the for-profit arm, operates trips to countries where the charity side does the development work. So you would have volunteers and big donors who would go, and they would stay in these really kind of often quite luxurious surroundings, and then maybe they'd help like dig a foundation for a school or something for a little while, or tour a community. And the revenue from those trips would go into the organization, and some of it would go into the charity. And obviously that was hit by COVID. You can't travel during COVID. The stadium stuff was shut down as well because those events couldn't be held. But then the other thing that happened was in June, the Canadian government, under Justin Trudeau, awarded We a lucrative contract to run a program offering COVID relief grants to student volunteers. And this would have paid a lot of money, like up to $35 million, which was like, equivalent to a year of corporate and foundation donations. So it really seemed like a lifeline. But the contract was uncontested, and it turned out that Trudeau family members had been paid hundreds of thousands of dollars in speaking fees and expenses for past roles supporting the charity. So there were immediately accusations of conflict of interest. And in the course of that scandal, as Joel said, you had former employees stepping forward with allegations of racism, of exploitative behavior, and just generally a lot of people started looking much more closely at this organization.
Okay, so where do we stand now for We, and what's the organization plan to do going forward?
Going forward, it's not entirely clear. I mean, they have said that in Canada, the charity arm is winding down. They're planning to sell. They have quite an extensive real estate portfolio, which they're planning to sell to fund an endowment that they say is going to be used to sustain their international projects. But they are still operating the charity in the U.S. They're looking at their U.K. arm right now. And so the possibility of a comeback, I think is not out of the question. They have supporters, including some wealthy ones. One U.S. donor, the Stillman Family Foundation, has taken out full-page ads in Canadian newspapers supporting the organization. But it's not clear. And certainly if We doesn't survive, one of the things that makes me the most sad is that there's going to be a lot of collateral damage in communities in the developing world. Obviously the hope would be that some corporations that have parted ways with We amid all of this may step in to help those who are stranded, but we just don't know yet.
So Danny, one of the most interesting things that I think your reporting brought to light was how complicated of a business structure We has used. It's for-profit when it wants to be, but then it's also a nonprofit when it wants to be. What did your reporting reveal about that? And then I also just wanted you to touch on, the Africa element of the reporting as well.
Yeah, I mean, the story is quite long. The reporting that we did, and certainly Natalie Obiko-Kirsten did, was absolutely exhaustive. But dozens of entities linked to the Kielburgers or to top We executives. There's a graphic in this story, which was our attempt to kind of map the connections. We says the complexity has been dictated by tax laws and regulations, especially in Canada, that kind of trickled down to the structure elsewhere in the world. But I mean, if you look at it, it's kind of clear as mud. Even one of their former longtime board members in parliamentary testimony this summer said she didn't know how many entities they had. So it makes it difficult to untangle. The accounting is also difficult.
Yeah, I can imagine.
To untangle. Sorry, did you...
No, I think we're running out of time here. But I just wanted to thank you, Danielle, for that reporting. And it's just a fascinating report. I urge everybody to take a look at it. The story in Bloomberg Business Week with Danielle Bakov. She is Toronto Bureau Chief for Bloomberg News, joining us from Toronto. And Joel Weber, editor of Bloomberg Business Week, on the remote access line from Brooklyn. Just a fascinating discussion, particularly for those folks in Canada. But everybody, I think, will find it very interesting. For those of you listening in New York, D.C., and San Francisco, or watching on YouTube, Bloomberg Business Week continues. If you're listening on Bloomberg 106.1 in Boston, Bay State Business is next. We will carry the conversation forward as we drive to the close. This is Bloomberg.
Bloomberg World Headquarters. I'm Charlie Pellet. We move into the final hour of trading on this Tuesday, December 29, as 2020 winds down. The Dow, the S&P, NASDAQ, they're all winding down right now, with the S&P down 7 at 37.27, a drop now of 0.2%. I'll give you the why in just a moment. The Dow is down 77, a drop there of 0.3%. NASDAQ is down 48, a drop there of 0.4%. Stocks are slumping. Small cap shares on track for their biggest drop in 2 months. Prospects faded for bigger government aid checks to individuals. Gold is up 0.3%, $18.78 the ounce. West Texas Intermediate crude up 0.8%, now at $47.99 a barrel on WTI. 10-year yield now 0.93%. As for the interest rate outlook in the new year, Christopher Wolf is Chief Investment Officer at First Republic Private Wealth, and he was interviewed this morning on Bloomberg Television and Radio.
I think you're in a world where the combination of all of the debt that's being created and a little bit more concern about how the dovish policies of the Fed may work in this environment is going to push interest rates up a little bit. Pretty good for banks overall, but it's also good for a broader set of the economy.
And again, we've got the 10-year at 0.93%. American railroads are back. Freight volume posting the biggest quarterly gain in 2 years. Carloads increased 2.8% in the fourth quarter from a year earlier, with only a few days remaining in the period. This according to the American Association of Railroads in their weekly reports compiled by Susquehanna Financial. And among some of the biggest railroad names today, CSX down 1.6%, Union Pacific down 0.5%, Kansas City Southern is down 0.4%, Norfolk Southern down now by 1.8%. Apple shares briefly on track for an intraday record, continuing a year-end surge that cemented its lead over Amazon, but Apple shares have since retreated. Right now, Apple is down by 1%. Year-to-date, however, Apple remains up by 84.4%. Recapping, S&P down 7, a drop of 0.2%. I'm Charlie Pellet, and that's Bloomberg Business Flash.
All right, thank you, Charlie Pellet. Talk about, Apple, man. Woof, add like $1 trillion this year. Anyway, I'm Alex Steele alongside Paul Sweeney. Let's stay on tech for a second. We are joined now by Rob Locascio, founder and chief executive officer of LivePerson. He joins us from Fairfield, Connecticut. Rob, is the Luddite here on the show that's sub-anchored less. What is LivePerson?
So we provide the technology when you're messaging with like Delta Airlines or T-Mobile, and you're like messaging them for customer care and sales, and we provide the platform to provide that technology. And then we provide an AI layer to do these conversations with automation, what we call chatbots.
Rob, I'm a stock jockey, so the first thing I do when I talk to a CEO is I pop up with a symbol of the company, and LivePerson, LPSN, on the Bloomberg terminal is the stock symbol. Market cap for the company of about a little more than $4 billion. The stock is up 66% year to date. Talk to us about how the pandemic has impacted the way your clients, companies, like Delta Airlines, like David's Bridal, like the Home Depot, like Chipotle. How has it changed how they want to interact and message with their customers?
Yeah, my original vision when I started the company was really about providing a digital experience, much like when you walk in a store. You walk in a store, you're talking to somebody, you can ask questions, they help you. Now with stores being shut down during the pandemic or limited access, what happened is the acceleration of the use of our platform to recreate the store experience, but digitally, is what really has driven the demand in our business. We're going to grow about over 25% this year, and we 3x the number of messages and traffic on our services, because consumers, they still want that personal service, and they can't walk into a store. So that changed the game for us with companies like Chipotle and companies like that, and Home Depot.
So what do you do then with, say, the customers at Home Depot and Chipotle that you do that's different than the standard, like HSBC, for example, or RBS?
Yeah, so Chipotle was really interesting. Obviously, the pandemic hits, people are not walking in, to the stores. So how do we, really change the game there? So what we came up with was a bot called Pepper, and you communicate with Pepper through Facebook Messenger, through iMessage on Apple devices, and you can start basically configuring your burrito right there, and then you go to the store and they hand it to you when you get to the door. So it really solved the problem of, I'm not walking in, I need to be socially distanced, but now I can do this without having to, sit in front of a burrito and have someone 2 feet from me. So that's the kind of stuff we're doing. We're doing it for one of the largest jewelers in the country. They got shut down too, but they wanted to create an experience where a consumer could see the product, communicate with someone, and then once again come to the door, pick it up. If someone's buying a diamond ring, they still have a lot of questions about that. So that's really what we're powering.
So Rob, give us an example of, maybe a company that came to you after the pandemic hit that perhaps you hadn't seen before, or you'd called on and they weren't interested, but they said, boy, the world has really changed. We need some AI-driven messaging. We need to up our game.
Yeah, I go back to this jeweler. A jewelry company was the largest in the country. We would never go after them because normally we are powering contact centers. So we're powering these large contact centers like the T-Mobiles of the world and the HSBCs. And what happened was retail, and especially this jeweler, came to us and said, look, we can't get people into the stores. They want to buy jewelry. How can we create a different experience with you? And then during the first couple of weeks, we went live right after Thanksgiving. We sold a couple $1 million worth of jewelry within 2 weeks.
Whoa!
So they weren't even sure themselves. We'll make an announcement, the name, and everything that shortly. But they weren't even sure themselves. Would people buy jewelry like this? How would they do it? But they are so bought in on how this just changed the game. And now they're rethinking. Now what's happened is not like, oh, we have to have our stores open or we've got to create the same experience. Now they're thinking this could be a main way in which we sell. So we're bringing video to that now too. So you can do a video conversation. And then we have all this automation. We have all the AI that'll keep the consumer engaged. So maybe they bought something. There's a follow-up from the AI. How did it work? How was the gift for your wife? And we build all of that connective tissue to create this unique consumer experience versus they went into a store, went home, and now they're on their own. They're always connected to the brand.
Okay, so based on that, I get why it would work for a jeweler, right? Because you're not going to drop like thousands of dollars just by looking at something online, right? You want to talk to somebody. I get that. But for like a Chipotle, why wouldn't I just go to Seamless and like buy it on Seamless? Like there has to be some kind of barrier for entry that makes the most sense.
Because first of all, Seamless puts themselves between the consumer and Chipotle. When you think about it, they're in between them. They've got the relationship. So Chipotle said, we want to have a direct relationship with our consumers. And the other thing is that you find consumers want to ask questions versus they may just be looking at a menu, but in this case, they may want to ask a question about, hey, I'm a vegan. Can you help me with that? And they ask different questions with the AI versus I just see stuff on a menu. I may or may not see what I like. Where is this? Is the beef grass-fed? Is it not? And those are the types of things we can create in the experience of what we call conversational commerce. So when you think about the vision of the company is that, we know Alexa exists. Obviously, we've all used this, or many people have. We're trying to bring that same experience to every brand in the world. What if every brand had their own Alexa? And they had that you could talk to this machine and get help and get much more personal service than just a static menu. And that's the transition that's happening right now in digital commerce.
Hey, Rob, what's in the next 20, 30 seconds, what's the next category that you think is ripe for your technology, where you think you can help?
Look, we launched a bank called Bella Bank in partnership with another company, and it's out there now, and you can go and see it at bellaloves.me. And we built this AI to bring love, empathy, trust to banking. And if you go and you download the app, there's this thing called Bella, and it helps you. And it literally will, like, if you're getting a cup of coffee, sometimes it picks up your cup of coffee. It actually pays for your cup of coffee and says, look, this is on me. Maybe this will make your day brighter. And so we built this technology because we wanted to change the banking world. And so that's a great thing. We just put it out there. We now have close to 8,000 consumers that signed up in the last 3 weeks because they want that kind of trust and connection with something like a bank.
Interesting. Hey, Rob, thanks so much for joining us. Really interesting story. I saw your company went public in 2000, so you guys have been around for a long time. Good to see the company doing well here in a very difficult environment. Rob Locascio, founder and chief executive officer of Live Person, based in Fairfield, Connecticut. Just a really extraordinary story there. Right now, let's head down to Nancy Lyons. She's at our 99.1 studio in Washington, D.C. for World and National News. Nancy.
Thanks, Paul. Senate Majority Leader Mitch McConnell is scheduling a vote tomorrow to override President Trump's veto of the Defense Department bill. But the fate of a proposal to increase pandemic relief checks to $2,000 is less certain. Bloomberg's Irv Chapman has more on the Democratic efforts to call a quick Senate vote.
Senate Democratic leader Chuck Schumer made the case for the $2,000 checks.
$2,000 stimulus checks could mean the difference between American families having groceries for a few extra weeks or going hungry. The difference between paying the rent or being kicked out of your home that you've lived in for years.
Schumer asked for agreement that the Senate take up the House bill that approved $2,000 payments right away. McConnell's response:
Object.
McConnell promised to consider all of the president's objections to the stimulus bill that he did reluctantly sign. In Washington, Irv Chapman, Bloomberg Radio.
Some more modifications are being made to Joe Biden's inauguration. The congressional committee planning the swearing-in ceremonies has now canceled the traditional inaugural luncheon to honor the new president and vice president, saying a modified event is no longer possible due to coronavirus. The Joint Congressional Committee on Inaugural Ceremonies says it decided to cancel after consulting with Biden's inaugural planners. Former First Lady Michelle Obama is once again the most admired woman in America. The survey from Gallup found 10% of those who responded put Mrs. Obama in the top spot. This year marks the third year in a row she's topped the list. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Nancy Lyons. This is Bloomberg.
Okay, Alex, just when you think we may have approached a peak Bitcoin, I got another story for
You think that.
I know. Okay, it's come to football. Russell Okung, a Pro Bowl tackle for the Carolina Panthers, tweeted back in May 2019 that he wanted to be paid in Bitcoin. Now, more than a year later, Okung let the world know that he's become the first National Football League player to collect a portion of his check into cryptocurrency. The way it works is the team pays him in cash, but then he converts 50% of his cash into Bitcoin. He's going all in.
Yeah, I told you that. No, I didn't tell you. I told on TV, my goddaughter and her husband want to try and buy. They wanted the down payment for their apartment to be in Bitcoin, and the realtor was like, "I don't understand the words." But I think they're 26. That's
Yes.
kind of where you're going. You know what I mean? I can definitely see in 10 years or so that being much more normal.
Yeah, it's really interesting. And again, I kind of joke that I kind of felt like we were at the peak Bitcoin when I heard.
I don't want to hear that we can't afford it.
Sports talk
I don't want to hear
radio.
that it would add too much to the deficit.
But I think it's just a bigger issue. We continue to see greater and greater usage of cryptocurrencies across the board. And here's just another example of somebody taking compensation in Bitcoin. So it's really putting a lot of money and a lot of risk right on the table.
Yeah, or it's just an example of him just, diversifying and trying to be smart with how he's investing versus, say, putting it into real estate or putting it into a 401k or something like that. He's just converting money that he's being paid into something that he could think is intelligent. So, and he definitely looks like he's the winner this year. Was it 270%? So far this year?
Yeah, I'm just looking at the chart here. The trailing 12-month chart is just extraordinary. We were down at a low of 5,000 back in May, and here we are just under 27,000 here for XBT. For those of you on the Bloomberg terminal, you get your crypto stock price or just the prices of the crypto. It's just an extraordinary chart. Crypto, Bitcoin.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. The Dow, the S&P, NASDAQ off session lows, but red on the screen. It is a down Tuesday. Let's head right over to the first word breaking news desk for today's afternoon call. And here she is, Kriti Gupta.
Good afternoon, Charlie. Stocks trading lower ahead of the close. The Dow's down 43, the S&P down 5, the NASDAQ down 44, U.S. 10-year yield at 93 basis points, and gold trading higher by 5. Small caps down 2%, with 8 out of the main 11 S&P sectors trading lower. That price action led by gains in consumer discretionary and healthcare stocks. Real estate and industrials leading on the downside. The NASDAQ biotechs falling 61 points, transports losing 94, and semis down 8. The VIX at a 23 handle, with WTI crude futures up 0.9% on the day. Looking under the hood, though, Charlie, in the S&P 500, Amazon and Intel leading those gains, with Apple and PayPal on the downside. Wrapping things up, it's a low volume, light liquidity kind of day. All eyes on Washington and what's next for that $2,000 stimulus check proposal, as well as that Senate race in Georgia. Live from the first word breaking news desk, I'm Kriti Gupta, filling in for Bill Maloney. Charlie, all yours.
Right, I thank you very much, Kriti Gupta. No earnings after the bell. It is that time of the year, and to hear live breaking news over your Bloomberg, type Squawk, SQUAWK on your terminal. I'm Charlie Pellet. That is a Bloomberg Business Flash.
Charlie Pellet, thank you so much. We appreciate it. Well, one of the takeaways from this pandemic is the spotlight once again being shown upon the inequality, the income inequality, wealth inequality in this country. On the one hand, you have stock markets hitting all-time highs. You have housing markets ripping. Yet on the other hand, you have bread lines. You have people that, growing numbers of people that are food insecure. And it just lays bare, once again, some of those fault lines. Our next guest has written a very interesting story on this. Sean Donnan, senior trade and globalization reporter for Bloomberg News, joining us on the phone. Sean, talk to us about kind of what we're seeing in terms of this, a nation divided, as you call it.
Yeah, well, look, I think we've all been reading a lot about how this economic crisis and also how the recovery from it is amplifying inequality in the United States. But really what we set out to do with this story was to really put some names and faces to that. And so we looked at the stories of 4 people who are coming to the end of 2020 with their lives really having been knocked off course and off their economic course. In some cases, these are people who were solid members of the middle class who are ending the year on food stamps. There are people who were looking or were expecting going into 2020 that they were going to come out of the year in a better place for them and their family. And they've had the opposite experience. They are now in a place where it's probably going to take them another year or 2, maybe longer, to get back to where they started 2020. And that's some of the long-term consequences of what we talk about when we talk about the K-shaped recovery.
So give us some of the examples, because it was such an in-depth reporting, and just painting the different stories really kind of brings it home.
Yeah, no, absolutely. Look, I think of Donna Swangler, who is a suburban housewife in just outside of Philadelphia in Bucks County. She is someone who was able to kind of get the family over the hump by working from home, scanning documents that came out of offices for companies that were kind of archiving documents. When we all went home from the office, Donna lost that job. And she's lost that income. She was able to piece together unemployment. She also set up a Facebook group that has some 19,000 members to help other people in unemployment navigate this difficult system. But in early December, her benefits ran out. Her savings ran out. Her husband's a contractor who relies on home renovation projects. When people stopped letting people into their homes because the cases were surging again, the COVID-19 cases were surging again in October, November, and now, they lost that element of their income. And for the first time in December, they really didn't know if they were going to be able to make the rent. They made the rent. They're not sure what's going to happen in January. They've also applied, they started the year as a solidly middle-class family. They're now on food stamps, and they're waiting to hear just how much they'll receive in food stamps help each week And that all depends on what Congress does. And they were waiting over Christmas to find out if this bill, this $900 billion rescue bill would pass Congress and the president would sign it. And just the nuts and bolts, the dollars and cents of their lives depended on it. And that's just, that story is replicated, we know, over and over again in America today. But when you start talking to people who just worked hard through no fault of their own, has been dealt this economic blow, and it's gonna set them back for some time. And that's the thing that we need to remember. It's not just about this, kind of getting them through this rough patch that they're going through now. It's about getting them back on the track that they were on beforehand. And that's going to take a lot more work in 2021.
So, Sean, as you spoke to these four groups of people, how do they feel? What's their confidence level that, in fact, they will be able to get back to their pre-COVID kind of economic security level, wherever that was? Because you think about it, where we were pre-pandemic, we were at record low unemployment. Wages were rising 3-4% a year. How confident are these people, or have they just been really knocked back?
They're just, all four of the people are just not very confident at all that they can get back to where they started the year. And I think that's an important point that we need to remember as we report the recovery next year. I'm thinking of Jamie Torres, who had a thriving little beauty business that she ran out of a shed in her backyard in Lancaster, Pennsylvania. She took home something like $75,000 in 2019. She's ending this year applying for welfare. She's gone through all of her savings. She's on food stamps now. She's just come out of a surgery before Christmas that's going to leave her a few thousands of dollars in medical debt that she has to deal with as well. And she just does not expect that business that she was relying on, that bit of entrepreneurship, that great bit of American spirit, to get back to where it was anytime soon.
Hey, Sean, thanks so much for bringing this story to our attention. Very fascinating. And again, as you suggest, I think it's going to be great for the folks at Bloomberg News, and I know you guys will follow up, but how these folks are doing as the economy does recover, presumably in the back half of 2021. It'll be fascinating to see how that plays out. Sean Donnan, Senior Trade and Globalization Reporter for Bloomberg News, joining us on the phone with just a fascinating story. Alex, just putting some faces to some stories that we've all heard about: joblessness, jobless claims, food stamps, food lines. Just trying to really put some faces to those stories. And again, the question will be, how do those folks come back? This is Bloomberg.
market, you could save. Broadcasting live to New York, Bloomberg 1130. To Washington, D.C., Bloomberg 99.1. To Boston, Bloomberg 106.1. To San Francisco, Bloomberg 960. To the country, Sirius XM Channel 119. And around the globe, the Bloomberg Business app and BloombergRadio.com. This is Bloomberg Business Week.
You are listening to Bloomberg Business Week. I am Paul Sweeney alongside Alex Steele. We are sitting in for Carol Masser. Coming up, we're going to get the latest on the fiscal stimulus plan. Is it $600 payment? Is it $2,000? We will see. Plus, we're going to drive to the close and get a look at markets with Bill Smead, CEO of Smead Capital Management. All that's coming up. But first, let's go to Charlie Pellet and get a Bloomberg Business Flash.
Hi, thank you very much. And here's what's going on. 28 minutes to go ahead of the close. Paul Sweeney, stock slumping. Small cap shares on track for their biggest drop in 2 months. Prospects are fading for bigger government aid checks to individuals, but it's a topic we're on top of, a topic we're following for you right here on Bloomberg Business Week. Right now, the Russell 2000 is down 1.8%, certainly narrowing its losses. S&P 500 index, I'm calling it little change, down now by 2 points, but that is a drop of less than 0.1%. The Dow also down less than 0.1%, down 19 points right now. NASDAQ is lower by 34, a drop there of 0.3%. 10 years down 3/32, 10-year yield 0.93%. Gold is up 0.3%. Spot gold at $18.7908 the ounce, and crude West Texas Intermediate right around the $48 level, $48.03 right now, up 41 cents a barrel, higher by 0.9%. The government's top infectious disease doctor says the country's vaccination rate is lagging, and he's expressing concern about a post-holiday coronavirus surge. Anthony Fauci said on CNN that U.S. officials had hoped to have more people vaccinated by now. President-elect Joe Biden will be addressing the slow rollout and outlining his plan to pick up the pace in remarks coming up in just about 10 minutes from now. We'll have it for you live as he speaks here on Bloomberg Radio. Dr. Amish Adalje is senior scholar at the Johns Hopkins Center for Health Security, and on Bloomberg Television and Radio this morning, he told us the biggest challenge now is physically delivering those shots to people's arms.
It is true. If your hospital is busy dealing with so many COVID patients and you've got staff out sick because they're getting COVID in the community, you're going to have a much harder time having enough people to vaccinate. We are seeing vaccinations in the United States at least ramp up now. It was something that kind of trickled out in the first days of the vaccination. I waited a couple of days before I was able to get my vaccine, but now it seems to be moving at a much more rapid pace.
The Johns Hopkins Bloomberg School of Public Health is supported by Michael R. Bloomberg, founder of Bloomberg LP and Bloomberg Philanthropies. Intel shares getting a shot in the arm today. They're up now by 5.6%. The activist investor Dan Loeb has built a position in Intel and is urging the company to explore strategic alternatives, including a possible breakup of the chipmaker and the sale of assets. Again, Intel up now by 5.5%. Recapping S&P little change, down a point, down less than 0.1%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie, thank you very much. Markets following what's happening with the virus. Markets also following what's happening in D.C., which is just kind of blowing my mind right now. Help us break it down is Eric Wasson, who's joining us in D.C. from Bloomberg. Eric, I don't think I've ever seen this, that you have a sitting president pushing against his own party leadership within Congress to do something. In this case, it would be to amp up the $600 stimulus to $2,000. And then the GOP party saying no, and then individuals breaking within the party. What is happening?
Yeah, I mean, it's really quite chaotic, but certainly I think Trump is very angry with the Senate Republicans for not supporting his quick attempt to overturn the election, is trying to cause them some political pain. That's at least from sources and members who I know have talked to President Trump during his golfing vacation in Florida, have been saying that the president is just very enervated and angry with Republicans. So yes, this pushing the $2,000 check issue is very divisive. I talked to Jim Inhofe, a stalwart conservative, just now in the Senate. He said he can't support that, just too much spending. Whereas David Perdue and Kelly Loeffler, who are running for re-election in Georgia, today flipped and said they're going to support the idea, which is very politically popular. So it's a divisive and tumultuous time for the Senate Republicans right now.
All right, so maybe as a cynic, I'll just call it business as usual in Washington. But Eric, give us a sense of maybe the timing, how this, what is the timing of this? When are we going to get some resolution?
Oh, Paul.
Well, I think it's very unlikely we're going to see these stimulus checks raised. You know, there was McConnell blocked the attempt to pass them by UC. He blocked the attempt to schedule a vote this week. Now he's moving to the motions to set up this veto override vote on the defense bill. Tomorrow, he just announced tomorrow there'll be a procedural vote called a live forum call. Then that will probably set up a vote on Sunday to finally override. But then Congress expires and they have to start all over again. So the House could come back, you pass it when the new Congress convenes later in the day on the 3rd. We could go through that again. But at least the Senate schedule right now is for them to come in on the 6th of January, count the electoral votes, and then be out until the 20th when Biden comes in. So they'd have to do some changes in order to address this $2,000 check further.
But if we're seeing some Senate Republicans flip, like Perdue, you were saying, and say, okay, we'll advocate to 2,000, even if they're doing it for election reasons, if they wind up sweeping, if the Republicans wind up sweeping in Georgia, doesn't that like put the $2,000 stimulus much more on the table than it was 24 hours ago?
I think it does, and maybe there even is 60 votes. It's just that, Republicans themselves control the floor and reluctant to do something that doesn't have a majority of those, 52 or so Republicans. So they don't want to put something that divides, half of their base, even if they're Trump supporters, they do not support higher spendings or what they believe are handouts to people. One interesting idea Susan Collins was promoting in conversations with reporters today up in the Capitol was the idea of putting a cap on it. Right now, the way it's structured, because the 2,000 payments is higher and it's reduced, it's phased out for incomes over $75,000 at $5 for $100 of income. You can have a family of four pulling in over $300,000 and still getting a payment. So that's causing some heartburn among fiscal conservatives saying, look, if you're still employed and you're making six figures, should you really be getting a payment? So there could be some tweaking to that. And certainly if the Biden administration comes back with this proposal, we could see it incorporated into a stimulus bill that gets before Congress in the spring.
So, Eric, let's follow up on that real quickly, 30 seconds. What is the expectation for a Biden proposal?
I think one thing we've really seen a lot of support in Congress for is an infrastructure package that has bipartisan appeal. And if you package that, in front of a Republican Senate with other things that Republicans want, maybe extension of the Trump tax cuts or at least the corporate tax rate, you can see a grand bargain there. And that's something that I think Biden would be interested in possibly exploring. Again, to get McConnell off of this idea of blocking everything, there are certainly things that you could do, including possibly raising the debt ceiling, which has to be done next year to sort of seal a big deal.
Hey, Eric, thanks so much once again for your fine reporting. We really appreciate you helping explain what's going on down in Washington. Eric Wasson, congressional reporter for Bloomberg News, joining us on the phone from Washington, D.C. So, Alex, y'all clear now?
Yeah, all set.
Yeah, all set.
Totally makes sense.
Clear
no
as mud.
problem.
I just when's it going to happen and how much are we getting,
Yeah, but it also there's a divide in the Republican Party.
Yeah.
So then what happens? This isn't a Tea Party versus otherwise.
I know. This is just fascinating. If you're into this whole political scene, there's a lot going on in Washington. Right now, let's head down to Washington, D.C., to our 99.1 studios. To Nancy Lyons for World and National News. Nancy.
Well, you've been talking about it. Senate Majority Leader Mitch McConnell today blocked two attempts from Democratic senators to to pass a bill that would boost stimulus checks from $600 to $2,000. The proposal passed the House with a 2/3 majority yesterday. Senate Minority Leader Chuck Schumer expressed his frustration on the Senate floor.
I don't want to hear that we can't afford it. I don't want to hear that it would add too much to the deficit. Senate Republicans added nearly $2 trillion to the deficit to give corporations a massive tax cut.
McConnell says the Senate will consider higher stimulus checks in conjunction with 2 other of President Trump's complaints unrelated to the relief bill, an investigation into alleged election fraud and reworking a law that shields tech companies from liability for user content. Well, the federal government is out with new dietary guidelines, and Bloomberg's Nathan Hager says they're not much different from the old ones in a couple of key respects.
The recommendations from the U.S. Departments of Agriculture and Health and Human Services still call for limiting sugar to 10% of daily calories and no more than 2 alcoholic drinks a day for men. According to Dow Jones, a scientific committee had recommended lowering the alcohol limit to 1 drink and cutting sugars to 6%. They cited rising obesity rates and the links to other health problems. The government did include one recommendation from that panel, though: no added sugar at all for children under 2. This is the first time babies and toddlers have been included in the federal guidelines. In Washington, I'm Nathan Hager, Bloomberg Radio.
Fashion designer Pierre Cardin has died at the age of 98. He revolutionized fashion starting in the early 1950s. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Nancy Lyons.
A fascinating story on the terminal, Alex, from Dow Jones. It has to do with higher education. The coronavirus pandemic threw doctoral programs, like nearly everything else, into disarray. Now some department chairs see an opportunity for reform in what is perhaps the largest recalibration ever in academic graduate school programs. More than 140 doctoral programs across dozens of schools are saying they won't admit new students for the fall of 2021. We're talking about programs in 7 of the 8 Ivy League schools. They're pressing pause, as are others at the University of Chicago, University of Minnesota, and University of Washington, just basically shutting down and saying, we're waiting to get to the other side of this, and maybe we'll take this time to think about the whole doctoral, process, which can take multiple years of study and thesis writing and all that kind of things. So maybe just taking a pause here.
But you do have to wonder, too, aside from PhD students, is this also the chance for schools to lower their admissions as more of an equalizer, too, in that way? And I also wonder how schools are going to handle the kids who are going to be applying to college this year, who are going to be competing with the kids who got into college last year, who took a year off because of the pandemic. And I wonder what that dynamic is going to do, how it's going to change admissions or the pricing, et cetera. But this could be a good thing. Can I be a little Pollyanna?
I think so.
If you don't have to pay $80,000 a year for college, isn't that good?
I think that's a good. I think that really did call into question the value of college. And so I think we're starting to see a lot of parents really start to rethink that. And I can tell you, a lot of parents in my town who have seniors are panicked because they're concerned that, just as you were saying, some of those kids from last year who deferred or took a gap year are going to be applying this year, so it's going to be even more competitive to get into school. So, this pandemic has thrown higher education a big loop, and we'll see how it evolves. Fortunately, my 2 in college are seniors, and they are done.
And I have 12 years, so I'm good. I'm good.
Exactly.
I'm all set.
So it's interesting. So I only have 2 more tuition checks.
Congrats.
And then I am tuition free for another few years at least.
President-elect Joe Biden now delivering remarks on COVID vaccine distribution. Let's listen in live from Wilmington, Delaware.
We need to steel our spines for what's ahead. We need to follow even more closely the recommendations to slow the spread of the virus. And each of us needs to do what we can to protect ourselves, our families, and our fellow Americans. We're going to get through this. Brighter days are coming, but it's going to take all the grit and determination we have as Americans to get it done. So today, I want to be clear about 5 things every American should know about our efforts to contain COVID-19 and where the vaccine stands today. First, things are going to get worse before they get better. In September, we passed a grim milestone, 200,000 deaths. At that time, in this very room, many of you remember, I warned that we'd hit 400,000 deaths before the end of the Trump administration in January. Critics said I was being too alarmist and negative. But as I've said all along, I will tell you like it is when it comes to COVID. And the reality is, it looks like that we're going to hit that grim milestone. We've just crossed 330,000 deaths in America. We're averaging daily death rates of nearly 2,200 people, which means we'll lose tens of thousands of more lives in the months to come. Hospitals are being stretched beyond capacity, and that's data before we see the impact of the cases coming from the recent holidays and this upcoming holiday of New Year's Eve. People getting infected today don't show up in cases for weeks, and those who those who perish from the disease die weeks after initial exposure. So we have to anticipate that the infections over the holidays will produce soaring cases counts in January and soaring death tolls into February. You know, turning this around is going to take time. We might not see improvement until we're well into March, as it will take time for our COVID response plan to begin to produce visible progress. The second thing to know is the Trump administration's plan to distribute vaccines is falling behind, far behind. We're grateful to the companies, the doctors, the scientists, the researchers, the clinical trial participants, and Operation Warp Speed for developing the vaccines quickly. But as I long feared and warned, the effort to distribute and administer the vaccine is not progressing as it should. A few weeks ago, the Trump administration suggested that 20 million Americans could be vaccinated by the end of December. With only a few days left in December, we've only vaccinated a few million so far. And the pace of the vaccination program is moving now, if it continues to move as it is now, it's going to take years, not months, to vaccinate the American people. Which brings me to the third thing every American should know. The Biden-Harris administration will spare no effort to make sure people get vaccinated. I've laid out 3 challenges in our first 100 days. One of them is ensuring that 100 million shots have been administered by the end of the first 100 days. If Congress provides the funding, we'd be able to meet this incredible goal. It would take ramping up 5 to 6 times the current pace to 1 million shots a day. But even with that improvement, even if we boost the speed of vaccinations to 1 million shots a day, it will still take months to have the majority of the United States population vaccinated. I've directed my team to prepare a much more aggressive effort with more federal involvement and leadership to get things back on track. We will find ways to boost the pace of vaccinations. But as Dr. Fauci and others have stated these past few days, this will take more time than anyone would like and more time than the promises from the Trump administration have suggested. This is going to be the greatest operational challenge we've ever faced as a nation. But we're going to get it done. But it's going to take a vast new effort that's not yet underway. And to get things, and that gets me to the fourth thing that we should know. I'm going to move heaven and earth to get us going in the right direction. I'm going to use my power under the Defense Production Act when I'm sworn in order private industry to accelerate the making of the materials needed for the vaccines, as well as protective gear. Vice President Harris and I have been speaking with county officials, mayors, governors of both parties to speed up the distribution of the vaccines across the nation. We're planning a whole of government effort, and we're going to work to set up vaccination sites and send mobile units to hard-to-reach communities. And we also know there's a vaccination hesitancy in many communities, especially Black, Latino, and Native American communities, who have not always been treated with the dignity and honesty they deserve by the federal government and the scientific community throughout our history. That's why we will launch a massive public education campaign to increase vaccine acceptance. We'll do everything we can to show the vaccines are safe and critically important for one's own health and that of their families and the communities. That means we're also going to make sure vaccines are distributed equitably, so every person who wants a vaccine can get it no matter the color of their skin or where they live. And we're going to ensure vaccinations are free of charge. Fifth, while the pandemic rages on, and as we increase the supply, distribution, and administration of the vaccine, we have to remain vigilant. As part of the 100-day challenge, I'm going to be asking the American people to wear a mask for the first 100 days of my administration. It's not a political statement. It's a patriotic duty. Our administration is going to require mask wearing where I have the power to do so, for federal workers, in federal facilities, on interstate travel like planes and trains. And we've been working directly with county officials, mayors, governors to implement mask mandates in their cities and their towns and their states. Masking has been a divisive issue in this country, but COVID is a killer in red states and blue states alike. So I encourage you all to wear a mask. Encourage your family and friends to do the same. It's one of the easiest things we can do that will make a huge difference to save lives. Another 100-day challenge is opening most of our K through 8 schools by the end of the first 100 days in the spring. Look, we can only do that if Congress provides the necessary funding so we get schools, districts, communities, and states the resources they need for those so many things that aren't there already in a tight budget. They need funding for testing to help reopen schools, more funding for transportation so students can maintain social distances on buses. They need it for school buildings, for additional cleaning service, protective equipment, ventilation systems. This is going to require an additional tens of billions of dollars to get this done. And Congress also needs to fund and provide more protective equipment for frontline health workers who are still reusing masks and gowns. We need to scale up testing so anyone who needs one can get a test. After 10 months of the pandemic, we still don't have enough testing. It's a travesty. All this, vaccinations, testing, protective gear, is going to require more funding from Congress, more than was just approved. That's why I'll propose a COVID action package early next year and challenge Congress to act on it quickly. Look, my ability to change the direction of this pandemic starts in 3 weeks. With thousands dying every day between now and then, let me conclude by discussing what needs to happen now. I congratulate the bipartisan majority on passing the president's and then the president on signing the COVID relief bill. It's still, it's a step, an important step, still moves in the right direction. And it will help people in need. And it'll pay for some, but not all of what we need to fix the COVID response. It's a down payment. But now, with that done, I hope the president will also clearly and unambiguously promote mask wearing. I give former Governor Chris Christie credit. He and I have disagreed on a number of things, but I'm thankful he's now encouraging people to do the right thing and wear masks for themselves, their loved ones, and their country. I hope that President Trump will listen to him. He can do it too. It would make a huge difference for President Trump to say, wear masks. I hope the president will clearly and unambiguously urge all Americans to take the vaccine once it's available. I took it to instill public confidence in the vaccine. President-elect Harris took hers today for the same reason. And when the president's doctors recommend it, President Trump should take it and instill the same degree of confidence. Let me also say this to the American people. We can save, all the experts tell us, between 60 and 100,000 lives in the weeks and months ahead if we just step up together, wear a mask, socially distance, wash our hands, avoid large indoor gatherings. I know all these are not easy to ask, but I'm asking you to make a sacrifice. You're already making tremendous sacrifices every single day. It's hard on your lives, on your livelihoods, on your kids, on your families. It's not small what we're asking of you, but we're in this together. And the actions we take now are going to help us contain the pandemic and get us back to our lives and to our loved ones. So the American people, to all of you, I know there's a lot that we have to do, but I want you to know there's also much we can do. We're the United States of America. We've been through hard times before as a nation, and we'll come through this as well. I promise you we will. So please, I wish you a Happy New Year. May God bless you and may God protect our troops. Wear a mask.
That was President-elect Joe Biden giving some comments today about the plans for the first 100 days of his administration, going to be very aggressive in terms of dealing with the COVID pandemic and the treatment and the vaccines and getting vaccines out there. He's really calling for mask wearing for the first 100 days and of his administration. So again, a much more clear picture, and I think a much more forceful picture from a federal involvement here in terms of dealing with the pandemic than we've seen in the past, which relied obviously much more on state and local municipalities. So again, President-elect Biden is going to be taking a much more hands-on approach. So it'll be very interesting, and we'll have more on this coming up as we parse the comments from President-elect Biden. Right now, let's get a Bloomberg Business Flash with Charlie Pellet.
All right, I thank you very much. Here's what's going on. U.S. stocks at the close. The Dow, the S&P, NASDAQ, all declining today. Stock slumps. Small cap shares had their biggest drop in 2 months as prospects faded for bigger government aid checks to individuals. The S&P down 8, little changed at the close, down by roughly 0.2%. The Dow also down 0.2%, falling 68 points, while NASDAQ slumped 49, a drop there of 0.4%. Russell 2000 down today by 1.9%. 2 stocks fell on the S&P 500 index for each one that gained. 10-year down 2/32, 10-year yield 0.93%. Gold was up 0.3% at $18.79 the ounce. West Texas Intermediate crude up 0.8% at $48 a barrel. Bottom line, losing day for the U.S. stock market. The Dow, the S&P, and NASDAQ all declining. James Athey is investment director at Aberdeen Standard Investments, and on Bloomberg Radio and Television this morning, he urged caution on the part of investors.
Ultimately, I think valuations are over their skis here. I think there's a lot of good news, if not all the good news, if not too much good news priced. But one has to be cautious when sentiment and consensus is so strong as it is currently.
It was a down day for Apple, but those shares briefly rallied to an intraday record. Apple lower today by 1.3%. Intel shares advanced on word that hedge fund Third Point is building a stake and wants the chipmaker to explore strategic alternatives. Intel shares did advance today by 4.9%. Snap shares rallied after Goldman Sachs raised its price target to a street-high view of $70. Snap up 6.1% to $51.23. S&P down 0.2%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
Charlie Pellet, thank you so much. We appreciate that. Right now, it's time for movers and shakers, and we will do that with Sarah Ponczak. She's cross-asset reporter for Bloomberg News. Sarah, thanks so much for joining us here. You know where I want to start is small caps, a big underperformance today, and I'm just wondering, is this marking maybe the end of our part of that rotation trade we've been talking about?
Right. You highlighted their underperformance right around this time yesterday, and we just saw a continuation of it today, and even more so. Yesterday, we saw the Russell 2000 down for a second straight day, down just 0.4%. But today, it almost felt as though the floor just fell out. Even though you look at the other major averages, the S&P, the Dow, the NASDAQ, lower, but not by much at all. We saw the Russell 2000 today down by 1.8%. So if you do look at these 3 days in aggregate, we just saw the worst 3-day span for the Russell 2000 since the end of October. And we have to put that date into context, really. That came before the presidential election and before all the positive vaccine news, that next month, November, was the best month for small caps on record. We're in the midst of the best quarter for the Russell 2000 on record, up 30%. So to see this turn, a 3-day turn, and it has seemed over the past 3 days at least, that it is becoming a sustainable trend, even amid light holiday thin trading, we should point out, it's a different tone.
So, Sarah, we just heard President-elect Biden, giving us some comments as it relates to the pandemic, and he kind of highlighted what I think is most investors understand, which is, on the one hand, the next couple of months are going to be very, very difficult in terms of new infections and hospitalizations and things like that. But the good news, on the other hand, is we do have some vaccines, and President-elect Biden outlined a plan to do 100 million doses in the first 100 days to, really encourage strongly and enact federally in certain federal properties mask wearing. So there's that dichotomy that's out there. And that kind of goes to the market, because the question is, if you really believe that we're approaching the other side of this, then that rotation trade into more cyclical names still makes a lot of sense. But if you sense that maybe this isn't going to go as smooth as possible, maybe some of the big high-tech growth stories are still the way to go.
Right, and that's why oftentimes, even over the past couple of months, on the days that we have seen those cyclical areas of the market, like small caps, like energy, like financials, really performing well, it didn't seem as though we were really seeing funds pulled out of those large cap growth names either. They were still holding in just fine. They were not falling out of bed, but they just weren't rallying as much, granted, because they had performed so much better throughout the earlier end of the year. And when I think about next year and think about 2021, there's often two outlooks that I hear that go against one another. One of them being the fact that things are aligning for 2021. You're going to have a vaccine rollout. You're going to have a rebounding economy. You have a very high savings rate and plenty of pent-up demand. Now, that outlook is the one that's going to help your cyclical trade. At the same time, though, there's another outlook that still sees next year as a positive one. However, they look at returns that we have seen in 2020 and the catch-up trade that we have seen really in much of the third quarter, at least the last 2 months of the year, and say these positive expectations are already baked into markets. You look at benchmarks and indexes trading near record highs, even though you might see some travel, hospitality companies still relatively depressed. But they go against one another, and it seems like there is no consensus there, at least, whether or not the expectations for next year that we'll see economic growth, that feeds into earnings growth, if it's priced into what we've seen so far in 2020.
Yeah, I think it's going to be really interesting, Sarah. You mentioned earnings growth, and we don't talk about that a lot. We talk about the big macro factors driving the market. But, there's a lot of folks out there saying, okay, the Fed has done its job. Congress more or less has done its job, is doing its job in terms of stimulus. The scientists in the healthcare industry has certainly done its job in coming up with vaccines. Now it's time for the companies to now deliver earnings. We'll give them a pass for Q1, but as you look to the second half of the year, you're going to have to really put in numbers and put in maybe better than expected numbers to support this market.
Right, and I'll give you some numbers here. I just pulled up analyst expectations. These are bottoms-up analyst expectations in aggregate for S&P 500 companies. In the first quarter, a rebound of 15.8%. The second quarter, 44.5% growth. Then third quarter, about 14% growth. And fourth quarter, 22% growth. You put that all together and look at the year of 2021, Analysts right now are expecting growth of 22% for S&P 500 corporate profits to $167 a share. That puts you right in the ballpark, if not above what we saw in 2019. So expectations are already high for 2021, to be sure.
Yeah, I think the pressure might be even, for companies, a lot of companies, they've been given a pass, rightfully so, I would argue, for withdrawing guidance. But I think at some point, it might even be in this next earnings cycle where they're going to have to be a little bit more forthcoming about how they think the year is going to roll out here. I'm not sure how much more rope investors are going to give some of these companies about giving a sense of how they expect their businesses to react to what should be a reopening economy in 2021.
Right. It's a really difficult proposition to be in. All year long, investors have wanted guidance from companies. However, at the same time, they've understood when they've kind of kicked the can down the road or given a pass because they didn't know what was coming next. At this point in time, you can see the light at the end of the tunnel with the vaccine rollout, but there are still a lot of uncertainties to be had, and it's still difficult for companies to really go ahead and invest in projects and do deals when there is still a sense of the unknown lingering not too far away.
Yeah, just quickly, I want to pivot, Sarah, because we can do that with you, to the Treasury market, the 10-year, 93 basis points. Are we going to push above 1% soon?
It's a great question. A lot of analysts and strategists are expecting a push relatively soon to say 1.25%, 1.5%. However, every single time it looks like we are going to make a run towards 1%. We saw it somewhat this morning with the 10-year reaching 95 basis points. We don't quite get there. The Fed has made it very clear that they are not going to budge. And we have seen inflation expectations rise, but at the same time, nominal rates are just having a really hard time moving up in a sustainable way.
Hey, Sarah, thanks so much for joining us. We appreciate your thoughts on the market. Sarah Ponczek, cross-asset reporter for Bloomberg News. Again, looking at the 10-year Treasury, 93 basis points. Kind of been in this trading range, over the last 4, 5, 6 months between kind of 70 and 90 basis points. We push up towards 1%. It tends to pull back here. Again, with the Fed saying lower for longer, it's hard to argue against that. Right now, let's head out to our 960 studios in San Francisco. Ed Baxter, World and National News. Ed.
All right, Paul, thank you. Eyes on the Senate today, and also President-elect Joe Biden. We'll get to both. Eyes on the Senate, two major issues. First, the relief check. Senate Majority Leader Mitch McConnell blocked the $2,000 bill from coming to the floor.
Those are the three important subjects the President has linked together. This week, the Senate will begin a process to bring these three priorities into focus.
And they are the checks, the amount, social media protections, and election integrity. Meanwhile, Democratic leader Chuck Schumer says it has to come, no excuses.
I don't want to hear that we can't afford it. I don't want to hear that it would add too much to the deficit. Senate Republicans added nearly $2 trillion to the deficit to give corporations a massive tax cut.
Now, whether or not they can get it done before the end of the session is a major question because they're still working on the defense veto bill, and McConnell said this about that.
Today, the Senate will set up a final vote for tomorrow, Wednesday, for this chamber to follow suit. Soon, this important legislation will be passed into law.
So it looks like that's going to, that would be the first override of the president's term, seeming to be falling in line. President-elect Joe Biden has made a COVID policy statement beginning with warning Americans the next few months are going to be the worst of the pandemic. And
the Trump administration's plan to distribute vaccines is falling behind, far behind. We're grateful to the companies, the doctors, the scientists, the researchers, the clinical trial participants, and Operation Warp Speed for developing the vaccines quickly.
He says in his first 100 days, 100 million people will get vaccinated. Dr. Fauci agrees with him, by the way, and we'll have more on that. In San Francisco, I'm Ed Baxter. This is Bloomberg.
All right, Charlie Pellet, fascinating story, in the world of fashion. Pierre Cardin, the Parisian designer who forever changed fashion when he broke with French couture houses and offered ready-to-wear clothing in department stores, ultimately transforming his name into a diversified global brand. He has died. He was 98 years old. And Charlie, I have a distinct memory of yours truly walking around the hood in Trenton, New Jersey, late 70s, early 80s, in a Pierre Cardin kind of jacket.
And I'm sure you looked absolutely dapper given his contributions to fashion over the years. But what struck me about his memory and his life is his willingness, and he did catch flack for this, was to put his name on so many different products.
Yes.
Because if I was telling the story about the wonderful fashion that I was walking around New Jersey, and it would have gone a little bit differently, and that is, I remember walking around Manhattan carrying a Pierre Cardin calculator. Now, he was willing to put his name on absolutely anything. Back in 1975, Time magazine, according to our Bloomberg News story, called him, quote, a shrewd fanatist who has tacked his name onto just about anything that can be nailed, glued, baked, molded, bolted, braced, bottled, opened, shut, pushed, or pulled. And that explains the little mini calculator that I had. But listen, I wasn't making Sweeney bucks, so I wasn't walking around in Pierre Cardin fashion. But what a life. What an incredible man.
Yeah, going to that point, it's interesting. Cardin, according to this Bloomberg reporting, leveraged his fame through branding, licensing, and franchising. For many years, he said his trademark had 800 licenses in 140 countries. That's amazing by today's standards, but going back to the 50s and 60s, that was really a novel strategy.
And speaking of putting his name on anything, he told the New York Times back in 2002, quote, if someone asked me to do toilet paper, I'd do it. I'm leaving it there.
I'm leaving it there. Pierre Cardin, dead at the age of 98, a fascinating life, and thought, just kind of enjoyed reading about his life and times. Just fascinating. This is Bloomberg.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. Developing story after hours. Moderna is confirming talks with South Korea to supply 40 million doses. Moderna shares up today, advancing by 2.6%. Stocks retreated from records today. Turned out to be a down day across the board here, but small cap shares had the biggest drop in a month as prospects faded for bigger government aid checks to individuals. Russell 2000 index down by almost 2%. S&P slightly lower today, down by 0.2%, dropping 8 points to 3727. The Dow lower by 68, down 0.2%. Nasdaq down 49, a drop there of 0.4%. 10-year down 3/32, 10-year yield 0.93%. Gold up 0.3%, 18.78 the ounce. And West Texas Intermediate crude 48 even a barrel, up today by 0.8%. Recapping, stocks lower. S&P down 8 points, down 0.2%. Russell 2000 down by almost 2%. I'm Charlie Pellet. That's a Bloomberg Business Flash.
Charlie Pellet, thank you so much. We appreciate that. Well, as someone who spent 20 years on Wall Street, I can let you know on a dirty little secret. Productivity tends to be challenged in the month of December because people are really focusing on bonuses. What's the bonus pool going to look like? The decisions tend to be made around year end, and then the dollar's actually paid out sometime in the first quarter. Lenan Nguyen joins us. She's a finance reporter for Bloomberg News. She joins us on the phone from New York City. Lenan, a bang-up year for Wall Street, despite all the uncertainty out there. The trading desk in particular really came through. Tell me they're going to get paid well this year.
I know this is a topic that's close to your heart, Paul, but unfortunately it doesn't sound like they're going to get paid as well as they would have hoped. Obviously, this is a good year for trading desks, but it's not really a good year for everyone else. And so the desks are going to be paid accordingly, and the banks are using this opportunity as a way to sort of be a little bit more prudent, a little bit more cautious, and not pay out the big bucks.
All right, so in my day, if I were, or anybody were materially disappointed, felt that they had been materially underpaid, the risk to that employer was, I'll just walk across the street and go, work for a competitor, presumably at a higher compensation. Is that a risk for some of these banks in this environment?
I think that is somewhat of a risk for the real rock stars, Paul, and for the people who can command that type of pay. But for everyone else, it's not a great year to be looking for a job. Obviously, there's a lot of uncertainty hanging over the economy. And so really it's a kind of like it or lump it situation this year. I think there are rock stars who will get paid handsomely for what they've done, particularly in fixed income this year. But for everyone else, it's going to be much more varied. Some people will get zeros. Some people will get very modest bumps, and at some shops the bonus pool will be flat.
It's interesting, I think since the financial crisis, Lenan, it's been a tough comp environment. Even if the economics were there to support higher comp levels, the political risk seemed too great. Is that still something that these big investment banks are worried about? They don't want to see a big story on the Bloomberg terminal about how some banker got paid this phenomenal amount of money and then went out and bought a bunch of Ferraris?
That's precisely it. I think the banks after 2008 are much more aware of the Ferrari risk. They're much better at reading the room. And so they do face a lot of scrutiny when it comes to pay. And obviously, the city of New York releases aggregate data about banker bonuses. And so there is a sense that the banks are being watched at a time when much of the real economy is suffering. Even if banks and traders pulled in a big windfall, it's just not a great look to be paying out in mega bonuses this year.
So, Leanne, I know things have changed, and again, driven in large part by the financial crisis. But pre-financial crisis, someone like myself, in most of my later years, 80% of my compensation was the bonus. So it was really important. But that's changed, has it? I think it's a lot more of compensation. Annual compensation is more in the fixed salary business. How has that changed?
Yeah, I think there is much more of a sense that the fixed salary is a big part and a more stable part of someone's income. Having said that, though, when people get big revenue jumps, they expect big bonuses to be handed out, as a reward for that performance. So we want to talk about some of the major banks, Goldman Sachs and JP Morgan. They've had a more than 40% revenue boost in the trading divisions, and yet the bonuses, max out probably around 20%. So it's going to be a bitter pill for a lot of traders to swallow, given that they're, very, very much the type of people who believe in themselves and believe that they should be rewarded handsomely for this.
Yeah, I guess one of the risks that's still out there for some of the employers, some of the big investment banks, is the hedge fund community. A lot of assets continue to flow into hedge funds, and that historically has been, certainly for the traders on the sell side on Wall Street, a great place to go that has maybe a better compensation structure. Is that still a trend in the financial services business?
It is, for sure. And I think for the traders who are able, again, to command that type of clout, of course, the buy side is definitely an attractive place to go. You go from being one of many tens of thousands or hundreds of thousands of staff on the sell side to, a smaller shop, and you can make a much more lucrative living on the buy side in some cases. But those are very, very scant and seats, and hedge fund shops are, notoriously lean. So it's only going to be for the cream of the crop and the best of the best.
Do you think we're going to see one or two or three companies pay materially better than the others, or do you think amongst the big New York banks it's going to be generally in line with each other?
I think there's more pessimism more broadly dispersed across the street. And I think even within individual shops, you're going to see a very big divergence between the desks that did extremely well, like fixed income, and maybe some of the desks that, were not as profitable, like equities. Equities margins are really razor thin. So even though there's a huge explosion in volatility and volume this year, that doesn't always translate to huge profits.
So Leanne, I know you've got great sources on the street. Will people actually, in January, February, and March, when they get paid, will they actually tell you dollars or percentages, or I'm really disappointed, or are they that forthcoming?
Well, they're forthcoming now, Paul. I've heard from people who are pretty annoyed about the guidance so far. They're looking at the earnings releases and they're saying, hey, look, the fixed income division or the trading division is up X percent, in the double digits, and yet, we're getting guidance about a flat pool. Like, what is this? They're pretty up in arms about it. And so right now I'm already getting that signaling. We'll see if they manage to negotiate better pay as a result of this going forward into the new year.
Right. Well, I've been on both sides of that discussion. Leanne Nguyen, thanks so much for joining us. Finance reporter, Bloomberg News, on the phone from New York, talking about the bonus pool. Bonus season is upon us on Wall Street. I'm sure Leanne will be following up with kind of what happened. We'll have more coming up. This is Bloomberg.
York to New York, Bloomberg 1130. To Washington, D.C., Bloomberg 99.1. To Boston, Bloomberg 1061. To San Francisco, Bloomberg 960. To the country, Sirius XM Channel 119. And around the globe, the Bloomberg Business app and BloombergRadio.com. This is Bloomberg Business Week.
Coming up, we're going to chat with David Spring. He's the CEO of venture capital firm Runway Growth, very successful longtime VC. We're going to get his thoughts on the venture capital trends for 2021. But first, let's go to Charlie Pellet for a Bloomberg Business Flash.
Hi, thank you very much, Paul Sweeney, and happy Tuesday to you. It turned out to be a down day for the Dow, the S&P, NASDAQ, light volume. A lot of people just taking the week off. S&P fell, erasing earlier gains after Senate Republicans blocked an attempt by Democrats to force quick action, increasing direct stimulus payments to $2,000. 9 of the main 11 industry groups fell as the S&P 500 index declined by 0.2%, down 8 points, ending the session at 3727. The Dow down 68, also down 0.2% today. NASDAQ fell from a record down 49, a drop of 0.4%. The big story, though, was the sell-off in small cap shares. Russell 2000 down today by 1.85%. 10-year yield 0.93%, down 3/30 seconds. Gold up 4.31 the ounce at 1878, up by 0.2%. And West Texas Intermediate crude up 1.4%, 48.29 a barrel on WTI. So a down day for the U.S. stock market, but Matt Hornback is head of global macro strategy at Morgan Stanley. And on Bloomberg Radio and Television this morning, he told us the gains for stocks will continue, and here's why.
The amount of liquidity that central banks are providing to markets, not just in the U.S., of course, but outside of the U.S. as well, is going to be pretty formidable. And I think markets are going to have a hard time not incorporating this liquidity into their prices.
Well, oil advanced with support from a weaker dollar and expectations of declining U.S. crude inventories. Among some of the oil names today, Big Oil, ExxonMobil down 1.1% today. BP was up 0.4%. EOG Resources down 0.5%. And Pioneer Natural Resources, a little change, lower today by less than 0.1%. Again, recapping equities lower. S&P down 8, a drop of 0.2%. I'm Charlie Pellet, and that is a Bloomberg Business Flash.
Charlie Pellet, thank you so much. We appreciate that. Well, we are at or near all-time highs, as Charlie has been reporting this afternoon. But let us not forget the volatility of this year when we had a VIX, which is now about 23, touching 80. And obviously it made that very difficult for companies to raise capital, whether it was in the public markets, private markets, and particularly the venture capital market. Let's get a sense of kind of what went on in the VC biz in 2020, and maybe what are some of the trends that are on the horizon for 2021. We can do that with David Spring. He's the founder and chief executive officer of venture capital firm Runway Growth. He joins us on the phone from San Francisco. David, thanks so much for joining us here. I would love to get your kind of 30,000-foot view of the VC business. How did it perform in 2020?
Yeah, hi, Paul. Great to be with you, and thanks for having me. You know, the point that you were making about difficulty raising money, that's kind of what we all expected when we entered into this pandemic situation in March, and kind of the whole world stopped for a couple weeks, maybe even a month, and then by the middle of the year was back to normal, and now we're going to end up very likely 2020 will be an all-time record year for venture capital investment. It has skewed towards later stage companies where, again, all-time record in terms of the number of rounds, single rounds that raised $100 million. And through September 30th, that was 223. So it's on a pace to be, doing like one every business day. So you think about, back, I know you used to work on Wall Street, and as did I way back. That was an IPO back in the day. That's right. And now that's, there's one of those every single day. So I think you're going to see a very likely a record or close to it for venture-backed IPOs, and then you combine that with the direct listings that are starting to happen more frequently, still not a lot, and then SPACs, which was a huge phenomenon in terms of raising the SPACs in 2020, and those will be buyers of venture-backed companies in 2021. So, all things considered, what could have been an absolutely horrible year has turned out to be a very strong year for the venture industry. Some businesses, obviously if you're in a brick and mortar retail or in the hospitality or hotel business or travel, it's been really, really difficult. But for the most part, businesses that were in the enterprise tech world or even in consumer selling online, have done really well, not to mention the, flaming hot healthcare space.
Yeah. David, how much money is in the VC sidelines right now? I mean, is this still an area that's attracting capital? I just think about all the institutional investors, whether they're pension funds or endowments. They look at a 10-year yield at 93 basis points and they figure out, how am I going to make my return? And I hear more and more of them allocating more and more to what I would call riskier asset classes. And so just give us a sense of how much money is on the sidelines for VCs.
Well, so another record, I think you'll see 2020, well, I know you'll see 2020 be the largest for venture fundraising, in a long, long time. Already through the end of September, VC funds have raised $57 billion, and all of 2019 was only $55. So through the first 9 months, already broke the record of last year, and that brings the total dry powder way over $100 billion. So, wow. It's nothing compared to PE, and as you talk about pension funds, foundations, endowments, other institutional investors have, massive allocations to PE because it's enormously scalable. Venture's just not that scalable, but it has done a really good job of taking on more assets and deploying them prudently. The returns in venture are, strong again, and you're absolutely right. The institutional investors are looking to make bigger allocations, and that kind of shown through in terms of fundraising for VCs in 2020, and I think that will continue into 2021.
20 seconds, David, before we take a break. What is your view of SPACs?
So I'm relatively positive. I think SPACs have the potential to offer a very viable alternative for venture-backed companies. I'm fearful, though, that the number of SPACs will lead to overpricing in their acquisitions, and then we'll have disappointing outcomes. So net, I'm positive, but they need to be careful.
Hey, David, stick around. We're going to do some news and some business, and we're going to come back, and I want to get your thoughts on kind of how you're thinking about 2021, the world of venture capital investing. David Sprang, founder and chief executive officer of venture capital firm Runway Growth, joining us on the phone from San Francisco. He'll be back in just moments. Right now, let's head out to San Francisco, our 960 studios at Baxter for world and national news. Ed.
Yeah, there are lots of us out here, Paul. There's concern being expressed today that the Trump vaccine distribution program is way behind schedule, as expressed by Dr. Anthony Fauci, as well as President-elect Joe Biden.
And the pace of vaccination program is moving now, if it continues to move as it is now, it's going to take years, not months, to vaccinate the American people. The Biden-Harris administration will spare no effort to make sure people get vaccinated.
And he says he means that as assurance. Biden says the first 100 days of his presidency, 100 million doses will be administered. Both he, Fauci, and the CDC today say the worst days of the pandemic are before us. The CDC saying the U.S. will see 400,000 deaths by the end of the Trump term, which is just, January 20th. U.S. Senate today, two things. On the veto override of defense spending, Majority Leader Mitch McConnell says there'll be a vote tomorrow.
Not once in 6 decades has a Congress let its differences prevent it from completing this work for our national security and our men and women who wear the uniform.
He says it'll be voted into law tomorrow. On relief checks, McConnell blocked it from coming to the floor today, saying that they need a compromise.
This bipartisan compromise was our shot at getting help to working families on the urgent timeline that they need.
But Senator Bernie Sanders says it needs to move to $2,000 now.
Working class of this country today faces more economic desperation than at any time since the Great Depression of the 1930s.
And Donald Trump lashing out at Republicans and said, negotiate a better deal or get better leaders now. In San Francisco, I'm Ed Baxter.
You know, Charlie Pellet, I think you and I may be one of the few New Yorkers who are not decamping for Florida. A great story on the Bloomberg Terminal today. Tucked away in Florida's Panhandle, Walton County is one of the fastest growing regions in the country, home to the best beach in the U.S. and some of the last pristine undeveloped land in the Sunshine State. And one developer has a lock on it. St. Joe Company, a real estate firm in Northwest Florida, has seen its stock more than double since the end of September as the COVID-19 pandemic has fueled a migration from the densely populated cities in the Northeast to Florida's sand and surf.
You know, you're absolutely right. Just got off the phone with American Airlines trying to get down to Walton County. I looked at the picture on the Bloomberg story here. What? That's my kind of beach. You know, yes, you got the buildings in the background there, but it is that sandy beach that you get on the Gulf side of Florida.
Yep.
You've got the nice small Gulf waves. You can walk out as far as you want. They got the shells on the beach. I love that part of Florida, not like the Atlantic side, which tends to be more crowded. But yes, our story too is all about the St. Joe Company, a real estate firm in Northwest Florida. Looking at the year-to-date gains on that stock, up more than 100%. Looking at the gains for 19, up by 50.57%. So St. Joe, major real estate firm in the area, big winner in all of this. And of course, the investor in St. Joe that we're also focused on here, Bruce Berkowitz's Fair Home Fund.
Yep, the largest shareholder in St. Joe. The stock's rise after more than a decade of fits and starts has provided vindication of his long-held belief that the area was a treasure waiting to be discovered.
Indeed. And why do people go down there? Natural beauty, low taxes, and a lot of sunshine. The only negative, not that there are too many negatives about Florida, when it rains, it rains.
It rains, and they tend to get hit by some big storms. But again, we've seen the likes of David Tepper from Appaloosa, the hedge fund giant, leave New Jersey to go to Florida and move his firm down there, to some other folks just in general saying enough is enough. COVID was the final straw that broke the camel's back. We're going to Florida, and we'll see how it goes in Walton County. This is Bloomberg.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. Developing story. This headline from the Bloomberg Professional Service. Colorado has found its first American case of the UK COVID-19 variant. Again, repeating, Colorado finding the first American case of the UK COVID-19 variant. It was a down day on Wall Street. Light volume. S&P 500 index fell 8 points today, down 0.2%. Stocks retreating from records. Small cap shares had their biggest drop in a month today. Russell 2000 down 1.85%. The Dow lower by 68 points, also down 0.2%. Nasdaq down 49, a drop of 0.4%. 10-year down 4/30 seconds. 10-year yield 0.93%. Gold up 0.2%. 18.77 the ounce. West Texas Intermediate crude up 1.1%. 48.15 a barrel. I'm Charlie Pellet. That is a Bloomberg Business Flash.
Charlie Pellet, thank you so much. We appreciate it. Let's continue our discussion of all things venture capital. We can do that with David Spring, founder and chief executive officer of venture firm Runway Growth, calling us on the phone from San Francisco. So, David, you just gave us some positive feedback or positive results from 2020. What's the VC community think about 2020? I think 2021, because if you look at the stock market, all-time high, it seems like at least public equity investors are looking for positive developments, positive market trends into 2021. How about in the VC market?
Yeah, so like the stock market, VCs tend to be optimists and look way out, even further than the stock market. Which sometimes you've got to remember to keep your feet on the ground and remember where we are in the middle of a health pandemic that's led to a recession and massive job loss and food insecurity and small business closure and worst of all, almost 350,000 Americans have died. So with all that said, though, kind of looking forward to 2021, my personal view is that it's going to continue a lot of what we've seen in the second half of 2020, which is really just an acceleration of some trends that were already in place. And I can highlight 4 of them. 2 of these are, well discussed. In fact, on your just commercial break, you were talking about one of them, and that's kind of this exodus, or a better way to, or a nicer way to say, a geographic shift from San Francisco and New York City to other areas. And then the one that really has been, instrumental in leading to the valuations that are assigned to some of these big tech companies is the digitization of everything. This was already happening, but was forced to accelerate really across the board, from big business to small business to our homes, obviously education and healthcare, and that's going to continue. So those are 2 very big and well publicized things that will continue, and we can talk about those. The other 2, which are a little more nuanced and more focused on my little small part of the world, I guess, in venture and kind of entrepreneurial ecosystems, is I think there's become, on the part of entrepreneurs, and this is for lack of a better word, a pursuit of purpose. And it's not ESG, because that's really kind of more driven by institutional investors, but more like there has to be a why along with, we're going to build a great company, we're going to create a valuable business that has a high enterprise value, and the employees and the investors are going to do well financially. But there really has to be a why as a part of it. And that's linked to the 4th observation that I think is going to continue to happen, and that is that the entrepreneurs and management teams are going to be more thoughtful about how they fund their businesses. And yes, venture capital is the great funder of these companies, but there are other means like venture debt, and they're going to look for an important alignment of philosophy and ethos and how the company is going to be built.
So, David, when we think of venture capital, oftentimes we think of industries that get supported by venture capital being technology, healthcare, for example. Those are the ones that come to mind. What are some of the other areas that you find interesting broadly?
consumer products. So if you look at, you probably covered 80% of venture funding if you say life sciences, healthcare as one bucket, technology broadly defined as another, which would include media, telecom, communications infrastructure, semiconductors, all of that kind of stuff. And then consumer, is the other big thing, and it can be consumer internet stuff, it can be apps, or it can be consumer products. We personally are not big investors in, traditional retail where you have to go lease a footprint. And thank God that worked well for us in the COVID era. But we are big believers in direct-to-consumer brand building, and we've been fortunate enough to be behind some pretty interesting stuff there, and we'll continue to do that.
So one of the other things that we've seen maybe just accelerated from this pandemic and the work-at-home phenomena is, again, as you mentioned, people moving from big cities to other parts of the country. Talk to us about San Francisco, Silicon Valley, the heart of this country's tech business since the days of Intel and Hewlett and Packard. Give us a sense of flash forward maybe 5 years from now. How do you think that might be different?
I think in 5 years people will be looking back and saying this was another big false alarm. We heard the same thing after the internet bubble burst in 2000, 2001. It's the death of Silicon Valley, and it ended up being, if you look at the time from then, whatever it was, 18, 19, 20 years, it's bigger and better than it ever was, with names that weren't even around at that time. So I do not believe for a second that we're now looking at the end of Silicon Valley, and we're certainly not looking at the end of New York City. I totally get that some people want to move to, places that might have a different political climate or that have lower tax rates. But when they move out, other younger, entrepreneurs will move in. And that whole cycle of, creative destruction will happen again. And so I would be a big buyer of San Francisco and New York now.
How about some of the larger public companies that we've seen, the tech companies move, or maybe it's just the headquarters that, they're from California to, say, Austin, Texas. Is that a little bit more for show, or is that, again, a trend that people should be concerned about?
Well, yeah, it's certainly disappointing when you see Hewlett Packard and or Hewlett Packard Enterprises and Oracle, move out of the state. I think they both have said, or I know HP has said, that it's really not going to hugely impact their employment base here. And at least in the case of HP, they already had, all of those people that came from Compaq in Houston. So, very, very disappointing. But I don't think those moves are going to majorly impact the startup ecosystem in Silicon Valley.
So 30 seconds left, David. How many deals do you expect to fund in 2021?
21, just to match the year.
Is that right? Would that be it?
No, it's about right. 20 is a good number for us.
Is that a typical number for you guys?
Yeah, it ranges. We'll see thousands of deals, but we're very selective. But yeah, that's about right.
All right, interesting. Well, best of luck with that, getting that done. David Spring. David's a founder and chief executive officer of venture capital firm Runway Growth. A lot of experience over the decades in the VC space. He joins us on the phone from San Francisco, which is still the king of technology in these United States with Silicon Valley. But again, a lot of other places in the country really trying to attract that capital with lower taxes, quality of life, lower cost of living. We'll have to see how it plays out over the years. We'll have more coming up. This is Bloomberg.